Now I'm live. Shit. Oh, man. The hotkey didn't go through, guys. I'm sorry. I've been live here for a few minutes now. Um, and now it's just coming across. So I do apologize. I do apologize. Let me see what's going on here. I've just been rushing all morning. All right, so my screen is up. Mic's good. Okay. Good morning. We'll start this over again. All right. I was looking at NVIDIA. All right, as one of the names. We just had a low volume pullback here. Looking like a bull flag. Can she break out? Can she break out? I don't like the volume to the upside. We need an increase in volume. I think I may miss this trade. 490. Let's look at the 490s at 26. 25, 79. Yeah, so right now I'm just getting again. I mentioned yesterday that I had a doctor's appointment, and I was going to be a bit behind, and it took a lot longer than I thought. It should not have. I felt like it shouldn't have taken that long, but it is what it is. It is what it is. We're here. We're good. I was rushing the whole time, trying to get the stream up. All right, let's see what happens here. Let's see if we get like a shakeout to like, if I can get, it may try to go to the upside now, but let's see if we get a pullback again, the VWAP here. All right. And then see if I can catch a short. I want to see if we can get another opportunity to take this long. Again, it looks like we have a gap fill up here. Yeah, you have a gap up here, so that's going to be the area that I'm looking at. 490s to like 494. You know, I really don't like the trade because there's not meat on the bone. I don't think there's meat on the bone. And I wrote on my paper 490 short. All right, so it's all going to depend on what the markets are doing. Let's see here. Let me go to the S&Ps. Let me have that up. And there was the dip. What did we say? Let's look for a dip. Possible little shakeout. And then, so we cleared that level. And we've got room to 497, it looks like. So maybe I'll put this on. It's down in price now. It just jumped up a lot there. That's not cool. All right, hold on. I'm not in. I kind of want to wait a second. Look at the S&Ps. They're actually at a point of resistance right now. And well, it actually has a few more points to go. You can see the S&P is 468.99. But this is also another good area. So, if you guys are new to trading or have what I want to know is, if you could comment in chat, what do you guys want to get accomplished this year? Is it a certain amount of money? Is it being consistently profitable? What is it? What are you struggling with, and what is something you would like to fix? So you notice here, like, that doesn't mean that it can't change, right? It can change. It's 9:55 ish. This volume is just getting lighter and lighter and lighter on this consolidation. And I'm really curious what happens here if anybody's going to try to take the long. I don't know if we need somewhat of a pullback to fill this gap below us. But I wrote on my charts yesterday 490 to for a short. Um, we're above this pivot high. Um, just trying to make the best decision. Again, just because something is a short, or just because something's, like, not everything is a short or a long, is what I'm trying to say. All right. And you can see here on the 15-minute chart, we're bumping into an area of resistance. It's like, what? Is there any meat on the bone? Let's go to the daily down here at the bottom right. I know it may be a little hard for you guys to see. It's hard for me to see too. I wonder if I could slide it up. So we're above the trade line now. Above there. Oh, 493. Oh, we have ISM Manufacturing. That's right, guys. Yes, I forgot about that for a second. I forgot about that. Nice bull flag here. I'm just being patient right now. I'm being patient with the vid. Alright. Let's see if this is a failed breakdown. Like, see if it breaks down, but then reclaims itself. I want to see a light volume pullback. I want to see this volume be low on this pullback, and that'll give me it'll give me it'll give me the confidence, is what I'm trying to say. All right, so the S&Ps are at resistance, or could possible resistance in this area. All right, it's that area on the S&P for you guys is 460 or 469. All right, and we're about there. It's this whole area that it's at right now. So feels like ISM Manufacturing is going to come in at the right time. Remember, what's the trend? The trend is to the downside. Is this your first? Is anybody that's here? Is this your first time here? All right, I think it might be time to think about getting in on this. I feel like this is going to be a failed breakdown, guys. What is that? 40. So I just took. I got filled at 40. Man, I shouldn't have did that right in front of the number, but I did. Oh, that volume is getting. Okay. Yeah, I don't like that. That's not good. 45 entry. Alright, 70. I'm just going to get a limit order out. Let me see what the spread is. I think it's going to pull back. I need to get rid of this. Alright, so I got a limit order out on a long, and I'm just going to manage this. I just put one in at like 75 cents. So, 75, edit order. It's turning that into resistance now. Let's go, baby. I'm going to take a piece off right there. I got filled at 60 from 40. Let's go. I lowered it to 6. There's that 60 again. 66. I'm just going to leave that 75 there. Let's go, baby. Hey, we literally just called it for you guys there. We said, let's see if we get that false breakdown. Right? There's that increase in volume there. What you have here is that, like, you know, I would love for you guys to be able to do that. And look, where are we at? 70 cents. You can bring your limit order down. The thing is, like me, I'm going to go into it in another thing because, you know, it's a shame that nobody's here. It's a shame nobody's here. All right, shame nobody's here. That's damn near 100% just in 2 candles, guys. There it is. There it is. 75. We're filled. I'm filled. There it is. False breakdown. Where did it go to? It went right to 75 cents. So it's cool that I got this recorded. We'll talk about this over the weekend, guys. I would love to be able to help you guys with, you know, being able to trade like a professional. For the, you know, as professional as I can get, you know. So, beautiful trade. 45 cents to 75 cents. What is that? 70% in 1, 2, 3 candles. Good deal. Good deal. How did I know to put that limit order at 75? How did I know? I didn't know. I didn't know. But I did know that that's about, when we opened up and the area was around 80 cents. I was watching the option price when it was up around here. It was fluctuating from 65 to 70. So the reason I put a 75 is because I have the order out and I can just adjust it really quickly. It doesn't take that long to adjust. Over 100%. 1, 2, 3 candles going on 4. We literally just said it. Animal, what's up, man? My camera's messed up again. Man, I forget the camera. Is it not on? You gotta be fucking kidding me. The camera's been on the whole time. It's been on the whole, like my camera up here was, the blue light was on, so I didn't know. Thank you for that. Bro, we just killed it. I just gave you got 100%. It's at 95 cents now. I was okay with where I got out at. I was okay with that. I was okay with that. Look at that. I'm going to replay this tomorrow in the video that I'm going to do tonight and over the weekend. We just called this entire move. Just called the entire move. I said, let's look for the failed breakdown. The failed breakdown. What is a failed breakdown? There's your bull flag right here. And I said, let's get us a failed, look at the 1 minute top right. Let's go right here. I said it. Let's see if we can get a failed breakdown in another test to bring in buyers. And what just happened? The thing is you have ISM manufacturing numbers that just came out. It could have went sideways. But here's the thing. Here is the key thing here. I've been watching time and sales, or level 2, obviously, and time and sales, but more so level 2, and understanding price. It's key. That's why I was able to set my limit order just under 100%, and I knew that it wouldn't be too hard to get there. Entry of 44 cents, exit of 75 cents. About an 80%, something I had to do the math. Now here's the retest. All right, here's the retest. Now, these 490 calls that are 80 cents, remember, we just paid 44 cents for. We just paid 44 cents for it. So if you're okay with paying 100%, you might be buying the dip. Or you might be holding the bag. All right? I fucking love it. God, I want you guys to be able to do this. Like, I would love to be able to teach someone, like, the instinctiveness and the wherewithal to be understanding what's going on. right? And to do as I said out loud, right? And it does it, and it starts to do it, and you second guess yourself, and you're not taking the trades. You know, it's like I said, let me see if there's a failed breakdown for me to get long. What happened? It failed breakdown. Now it's up to me to do what I said I'm going to do and not be scared, right? Not over position myself. Bada bing, bada boom. We're here to make money, and that's what we're doing. Off the gate, not even 10, 15 minutes in the market and a half hour in the market, and we knock out a damn near 100%. So they're now $1. Now the target, again, where do we say the target was? The target is up here at 490. My target was 490, 492. Let's see here. Let me see something real quick. So you got to be thinking about taking the. I would be taking this off at 490. I mean, I've already taken it off, but. Oh my gosh, come on. Sorry, I'm just trying to, for anybody that may or may not be in it, you got to expect this area here to be your stop. 489. 489 right in this area. But if you break it and you reclaim it and it looks like it's starting to go, you know, I don't think you're just going to get a crazy rejection off of it. Here's why I would not hold this thing. Even though we just started, we're only 7 minutes in on the 15-minute candle. Look at this volume, right? Look, it's kind of low. You want to see a nice fat increase on that. We still have a few more minutes. You still got 5, 6, you know, you got 6 minutes or so. 5, 6, 7, 8. You got 8 or 9 minutes, whatever the math comes out to be. All right, for that 15-minute candle. So what's going to happen is it's going to rise, and it's going to bring this trade line up with it when it pulls back. Wait for the pullback. It should bring the trade line up, and see if you can't be a buyer on the 15-minute trade line. That's what I would be doing if I wanted to get long NVIDIA again. You have the volume. It's not that great, but... So, what we got here? Animal, first off, how the hell you doing today, bud? How you doing, bro? How are you? Every time, let's see. So, the Tesla, you said to gain buyers. I think it had gained. Yeah, I can't remember. I knew that it wasn't going to go above that 100-day moving average. Well, I didn't know, but I'm like, you know, it's, you know, it needed to get, when you get that 50-day and the 100-day and you get a stock, when the 100-day is above the 50-day and you get a stock that falls, it's like falling into a hole, and it's got to, you know, it's got to trade inside the 50-day and the 100-day for a little while. It's like it's trapped in a hole. And then it squeezes. Those moving averages come in, right? And then that's like buyers or sellers, which one's going to give, because it's going to break. But every time, he says here, every time I predict something, after some time I go like, nah, I won't. And after 3 hours, it's going like I predicted that to go. Yes, exactly. And that is exactly what I was just trying to say is you say something, or you have this instinctive tuition, whatever it is, from your analysis, and you just don't stick to the plan, or you do not take it at all. And that's why I said, when I said that let's look for a failed breakdown, it is up to me. Once I get that failed breakdown and it's doing what I say, I got to take it. You got to take it. It's risk on. Your analysis is right. You know, take it. I don't care if it's small. Again, guys, we have one job. We have a number. Make that number bigger. That's it. It doesn't matter how you do it. Doesn't matter how big it gets. I mean, it would be nice to get it huge, but make that number bigger. Day after day after day. Your 2, your 3, your 5, your 10 yourself will thank you. It doesn't matter how small that profit is. Don't be too good for $5. If you walked past $5 right now on the ground, would you just walk by it and not pick it up? You know what I mean? Like, if you have to buy the stock outright, buy the stock outright. Don't, if you can't trade options. I'm serious. Like think about your future self and just worry about just worry about getting money because that's what you need right now. You need to build that capital up so that you can, do whatever it is that you want to do with it. But your job right now is to build your net worth up, build your capital up, not lose it, preserve it, and build it. Don't be too good to buy the stock outright and think that 2, 3% on five, six, $1,000, $10,000 isn't good enough. Because it is. It is. All right. So we did pretty damn well on these, right? Now you're starting to see here. We went to it. Those 490 calls that we bought went up to like just over $1, right? Dollar in the 90s, hanging out right around that dollar zone. Pulls back into the 80s. Let's see if this thing starts to pull back now that like these dailies we're gonna have some time. If it starts to pull back to like 486, right? This prior double top here, and see if we can see if those options come back down to like 78 or 74, 76 cents. Let's see if that happens. I don't think that it's just going to continue. It could continue to the upside, but I'm not expecting a drastic move out of Nvidia. Let's go scan the markets real quick. Let's look at JP Morgan. It pulled back half of the gains yesterday, and I missed that. This was on the list yesterday, and look, again, it's just they're trying. I feel like this is a nice double top here, because every time it makes some progress, it gives it back, and I feel like that's what it's trying to do right now. But because there's just from going through the different time frames on this, I'm seeing different. I'm getting different feelings from it, right? I'm getting a sense of divergence. I think it's got to pull back to 172. If you get a bounce, I would look to get short and take that to 172, whether it's 75-cent move, 50, $1 move, on a name like this, you might make more than you think. So, again, risk disclaimer, I am not a financial advisor. I can and won't tell you what to do. This is all for educational and entertainment purposes. All right? You got to get serious about your money. All right? If you're not. I know Anmo is. I got my Starbucks this morning. Thank you. You know who you are. The only reason I have it is because I didn't have coffee this morning. I had an appointment this morning, and I couldn't believe how long it took. Wow. I'm really thankful for that. I'm really thankful for that NVIDIA analysis that I worked on yesterday. So there you go, right? What did we say? Look at that 50-day moving average. Look at it bouncing right off that 50-day moving average, which is this red box. This blue box is the 100-day. So it's in a hole right now. So what it's going to do, it's just going to consolidate, right? And when those moving averages start to, squeeze it, you're going to start to see it like squeeze, whether it's to the upside or to the downside. And my guess is to the downside. This stock has done nothing for, 2 years? Making lower highs. For 3 years, I'm sorry. 3 years, just about. All right? 2021, 2022, 2023. 2021 actually was a high. So really just for 2 years, it's just been pulling back for 2 years. Just a long, drawn-out downtrend. Now we are, you know what? You do have that 200-day coming back in again. I would say, guys, if you're looking at Tesla, I think my drink... See, here's the thing. So if we go to, let's say if we go to, different Starbucks actually will be different price. Not like let's say if we go to the mall, right? Like Dunkin' Donuts, Starbucks, depending on which one you go to, will cost more. But, the one I'm at, it's like I think my drink's like $6. I think it's like $6. It's like 5 something. See, I get an extra shot of espresso, and a little extra caramel, caramel macchiato is what I get. With the extra shot of espresso and a little extra caramel. Um, but like Target, they'll give me that for like five something, just under $6 for my drink. Depends on who's working there. It all depends on what location you go to. Cause some will charge $7, $8. It's absolutely insane. All right, so let's see what we can do, man. We still got, man. I still want to. I don't want the day to end just yet. All right, Tesla. You want to hold this 238 level. You want to hold it. It looks like you have a good chance of doing that. If you, well, yeah, you want to wait for this. Hopefully, this pullback. You may have to pull back a bit farther. It may not hold. It might. It may not. You may just get another extension to the 100-day, and that would make your RSI a bit oversold. You're starting to see your MACD convergence. Um, all the telltale signs, lower volume of this thing possibly turning around. But I think it'll bounce. You may put in a double top here on Tesla and then see if it pulls itself back down to like 237, 236. What about how much roundabout is it your way, Ann? I keep noticing Apple is still trying to like hold this. It's trying to get some type of strength. I can sense it. Let me let my cat in. Let me make sure she's not trying to get in. Sorry about that. I had to use the restroom real quick. What a day so far. Freaking hype. And how much does Starbucks cost around your way, bro? And what do you got planned for the weekend? What are you looking at? Where are we going to make some money today, bub? I should look at not Peloton, but I should look at Palantir. I haven't done any analysis on it. So here we go. Again, last night I wrote in my paper, short at 490 area. So there's something going on at 490. So here's your middleman, right? The middleman on Nvidia is 485. Right? That just seems to be like, it pulls away from it, it gets drawn back to it. Breaks above it, gets drawn back down to it. $6, I can get a... I know. I know. Really? That's crazy, bro. That's crazy. Well, you got to remember it. You know how forex is. You know how that stuff works. You know. $6, a whole ass meal. Um, Man, that's awesome, bro. That's awesome. I wish that was the case here. Now, like, I could spend 10, probably. Give me 12. I mean, I could do it on 10. Um, we have, there is actually one place that's pretty good for if you're like low key budget for a day. Panda. I don't know if you've ever heard of that, but this place is actually really good. And especially they don't kill you on prices. Panda Express. This place right here, man, it's actually really good. I love their chicken. I don't know if you guys have any. A luxury meal at $6. Oh shit. Yeah, I feel. I mean, this place like here, so like your $6, like it would be like 12, right? And you would get like you could get like breakfast, lunch, and dinner for $12. So I know it's rough, it's hard. That's why I'm doing this channel. I know, right? You're getting a whole meal for $6, and they're charging the staff for coffee. It's crazy. I know. There's our guy Pete. If you guys don't know who Pete is, him and his brother are pretty well known in the industry. And he does some, I like every morning he comes
here
on.
in this first week. If
Let's
you
listen.
didn't get at, good morning. Yeah, first week, it's in the books. If you haven't got out there yet, let's close it up strong. It's going to be a great start to 2024, and it started here in this first week. If you didn't, get after it now. Let's get after it. Let's go. Giddy up. Good morning. Yeah.
Let's go. We're ending the week with a damn near 100% gain, man. What is the best trading session for U.S. oil? I mean, where are you? I don't know if you're in another country. I'm not sure. Futures. What is it? /CL. But I would trade individual names last week. And Tuesday of this week, sweet crude oil futures, yeah, so /CL, Oxy, like names, or XLE. I don't know what country, for U.S. oil. I mean, you could just do U.S. oil. You could just do USO, right? That is U.S. oil. The thing is I'm not sure where you're, if you're in the United States or not. I would just use energy names. It's funny you bring that up because 2 weeks ago, we sniffed this out right here. Right there. Swear on everything. We posted it. We smelt this out, and on this day, the day after this long drop, I was like, right here, we were like, I guarantee you, on this day, we were like, I guarantee you tomorrow you're going to see Berkshire Hathaway went and bought some shares. But I would do companies or XLE, right? USO. I want to actually, you know what? My goal for this year is to actually trade a little bit more. I still own a few energy names. I got rid of most of them, but I loaded up in 2020 on oil names, Oxy, Fang, One Oak, and I made money when I bought it. I didn't sell, and I sat for like a year and a half. It was all the way up until the primaries with Trump and Biden, and that's when they finally lifted off, and they've just went insane. Before I started this channel, I posted a weekly chart of Oxy. And on the weekly chart, you started to see the 50-day cross above the 200. I thought it was before this. But I started to notice that this was pulling up, and I'm like, hey, this thing's about to go. 50 or the 100. I don't know if I had logarithmic on or not. Because it was definitely before this. Look at that head and shoulders. Look at that weekly head and shoulders there. Left shoulder, head, right shoulder. If you guys see shit like that, this is a beautiful pattern. And look at the volume. On the you break out, pull back. Look at that extension. Like, these are head and shoulders. Cup and handles, right? You want to see them clean. But I would just do names. Again, I'm not sure where exactly you're located, or, you know. All right, is NVIDIA trying to pull back yet? If you guys are just joining us, we already went long. We were long this name literally right here. We got long. Literally on that pullback right there. Had to. Why did I have to? That's what I told him. That was the analysis. Let's look for a failed breakdown, right? A failed breakdown, right? What is that? Well, you have pretty much a bull flag here, okay? For the most part. I said, let's look for that failed breakdown. Like, wait for it to break down. But that breakdown is going to fail. It's just going to pull back into that support zone, shake some people out, blast off. We had the ISM manufacturing numbers, though. So I was like, you know what? Listen, but the risk to reward on that was good, because for me, I'm watching these options and I'm like, they're at 40 cents. They're at 40 cents. They've been at $1 something. I've been watching them. You know, they've been cut in half. They were right around 80 cents, 90 cents, like when we opened up. Or, you know, when I started watching it, because I came on a little late. But if I'm saying to myself, let's look for a failed breakdown, it breaks down, and I think that that's going to fail, I got to take it. I don't care if it's small, if I buy 10 contracts. You know, you don't need to buy 50. You have ISM coming up, but you got to buy 5, 4, 3, 2. You know, at 40 cents, you know, it's like the risk was worth the reward. The thing that I did not like about this trade, though, is the upside. I didn't think that, you know, my target was 490. You know, so to me, at 485 to 490 on NVIDIA, the volatility has pulled back a bit, but a $5 move in NVIDIA just didn't seem, you know, it just, you know, it's been making $15, $10, $20 moves. But again, the volatility has pulled back a bit. So yeah, we'll see what happens up there. I'm still not done though. So we were on JP Morgan yesterday, and 2 days ago we were watching it. And if anybody is in this, I mean, you notice how you're making new highs and our volume is starting to like pull back a bit, because nobody's going to go long up here. We're long down here. All right. It's still a good sign, because you are still getting an increase in volume, though. You're still getting that increase, right? You're still getting the increase through a new high. It's just that increase in volume is not a high. It's not, you know, it's not doing one of these. It's not like this, right? You're not getting an actual increase in volume, you know, for the day. You guys know what I'm trying to say. So, again, yesterday I wrote down 490 as a short, but you know, some of these names are a bit overdone. She's only up 2%. You know, 494 could be in the books. 494 could be in the books. That would be my final take. I'm out of this trade. Damn near 100% is good enough for me. Right? That would be my last target if anybody's deciding to take this. If you haven't taken it and you're thinking about taking it, wait for a pullback. Wait for this thing to pull itself back. You know, I still think you could get an entry somewhere down here at like 488, 487.90-ish. I still think that that's possible. But the thing with that is you're going to put yourself underneath your trade line. But what do? We look at the 5 minute 50. Oh, where's that 5 minute 90 EMA? It's right there, right there at 487.96. Now we said look for the extension. Now on a 15-minute chart, we said watch for the extension and then the pullback, because that pullback off of the extension is going to rip that trade that 9 EMA up to it. That's going to be a spot of entry. If you know, a lot of people don't do this, but if you have trade lines and VWAPs, those are places for you to enter and exit if you don't do it already, right? That's a place. What's up, Chris? Beautiful day today, man. How you doing today, Chris? Start, if you don't do this already, maybe think about it. Man, those 490s are up $1.50 from 40 cents. Yeah, am I kicking myself in the ass now? Yeah. I entered these at 44 cents. They're up $1.50. You know, it is what it is. I'm okay with just about 100%. Again, I'm okay with that. My target was 490. As long as you stick to your plan, it doesn't matter if it continues to go. You could get news any minute and this thing crater. 2, I forget what I was saying. I was just going off on a tangent, I guess. I was talking about the 15-minute trade line, I think. I forget what I was saying. Yeah, you see how this trade line's pulling up here? Watch for this to pull back, and it's going to really take that trade line up through VWAP. And, oh, yeah, use those as an actual enter and exit area, right? For you small cap traders, I'm good, bro. I'm good. I had a doctor's appointment, this morning, and I was a little late. Look, they're at $1, they're at $1.75 now from 40 fucking cents. I should have held that 490. It's like, what do? Do I just let damn near 100% go? I didn't want I didn't want to buy any more than I bought. I can't be upset about that trade. Because the thing is, we have ISM manufacturing. It's like, I had to, I couldn't just have my normal position size because there was risk, But I felt like, hey, I'm getting that failed breakdown. I need to take it, right? And I did, and the setup was there for the long, but I there's still that part of me where I'm like, don't completely rely on it. Live to fight another day. Don't turn this day into a disaster. Just normal position size, maybe a little bit less. Don't go crazy. I kind of wish I did. I kind of wish now that I bought 20 of them. 40 or 50, 20 or 40. Or 30 at least. But it is what it is. I bought 10 of them and took some off at 65 cents, and then the other ones were I got limit order filled at 75 cents. Not a bad day. Not a bad day at all. But many of the traders are saying labor market, what is it? It is unemployment rise, and the companies are not getting the manpower because I am not the yeah. So that's what the Fed's worried about right now, is the labor market, and the labor market's just unemployment. And you've been here. I've been talking about this. We've been seeing this 2 handle, and we briefly dropped below it, right? Right here. So Thursday we get our initial jobless claims, right? People that are not filing, but people that are continuously filing for unemployment. They're already on unemployment. How many people are filing claims because they don't have a job? So we got that yesterday. Unemployment rate 3.7. So here's the thing. The Federal Reserve and ECB, and the powers that be, right? They are trying to soften demand because they think by softening demand, it's going to help inflation. It's going to. I just told you I can pay anywhere from $7 to $9 for a cup of coffee, and it's even worse in New York. So if they are and the reason that prices are high, they're relating it to the employment levels. The employment levels are very low, so therefore people still have there is still more money for individuals to spend, and the tighter the labor market is, which is a lot of people working, 95% of the public is working, everyone has money, so therefore it's not going to help demand because everybody's going to spend, if I'm explaining it right. They want to soften the labor market. That is, they want to 216,000, the initial jobless claims. It's not up here, but we have been sitting around that low two mark, right? 200,000 a week. We briefly went under to like 190, something like that, maybe 180ish. It was like 198 or 195. But then we popped our head back up above 2, and we started to get up to 220,000. It looked like we were making progress, right? That more people were out of work and looking for work. And, the Fed is trying to do that because there's just, everything is hot right now. Everybody has money. Everybody that is anybody has a job, and they're spending money. And the more people spend, that's just more demand. So they're trying to soften it. They're just trying to soften things. Even though their two goals are stable prices and the unemployment, whatever. I don't know why I'm having a brain fart on the two objectives for them. But today, we did get non-farm payrolls, and a lot of people don't know this, but industrial production, retail sales, non-farm payrolls, those three together is the second tool that they use for labeling a recession or not, outside of two negative quarters of GDP. If you take 2 quarters of negative GDP out of the equation, they go right to non-farm payrolls, retail sales, industrial production. So they're just trying to soften things. And what this means is if the labor market is able to soften, that's going to soften demand, right? And therefore they don't have to continue to raise rates. They're trying to combat inflation. All right. And if anybody picks up a macroeconomic book, the first thing it says in the book is there is not enough. What's the word that they use? There is not enough, material, or there's not enough, on earth to provide everybody the best life. That's one of the first things that it says. So there are going to be losers where there are winners. There's going to be winners and there's going to be losers, no matter what. Now, does that mean everybody has to go hungry? No. It's not saying that. I'd have to bring it back up, but that's kind of getting off track. But that's what the labor market is. It's the amount of people that are filing for unemployment, what's the unemployment rate, things like that. And here we go. We said 490. Look for possibly a pullback up at that area on NVIDIA. So No. Nothing is dumb. And if anybody else has a question, man, nothing is dumb. Nothing is dumb. The only thing dumb right now is me thinking that I should have bought more NVIDIA calls. This is the greed. This is the aspect of the market that it brings out of people. I'm okay. I'm happy with what I have, but I should have stuck to my target of 490. That was the target. I didn't expect it's at 180 now. What is that? 40, 80, 80, and 86. That's like almost 400%, guys. If you're still in that trade. 490 was the target, and that's where it's at right now, pulling back off of it. So this weekend, I'm going to drop the video on what I think this year, because everybody is talking about AI. AI was one aspect to this year. It was not the biggest factor. I'm telling you right now. I've been listening to people try to give their analysis for 2024, and they're all missing it. I promise. They're all missing it, and I'm going to put it out this weekend, if not tonight. 15-minute, 20-minute video, go over some charts, but I want to dive into it because I think it is the most important thing of the year, and it's coming up. It's literally coming up. So, and I think that dictates whether or not we extend higher or we start to really see what the market thinks about the economy and what the economy is really going to do. Like, that's it. It's serious, and I'm not sure if I'm gonna put it out tonight, probably into tomorrow. Give me till tomorrow morning. I may do it tonight. I'll do it tonight. I'll just do it live. So here's something that I went through yesterday. Um, this is what I went through yesterday, all right? Like, by asking that, it all depends on my risk, right? It all depends on my risk. My risk tolerance may be different from yours. It all comes down to how much you're willing to risk. Let's say if you have a portfolio of 10,000, 5,000, 1,000, 500. I don't care what it is. I'll use $1,000 just as an example. If you have $1,000 account and your stop loss, like you're going to risk $100 to $200, and you're going to eat up 10, 15%, that's not too bad, but you have 10 times before you could be wrong. If I had $1,000 account, I wouldn't be risking $100. I'm going to tell you that right now. My risk tolerance would probably be 35, maybe 55, depending on the setup, and I would make sure that I am only trading the best setups. Because again, the very key thing is we have a number. We need to get that number bigger. We need to grow that number. That is the most important thing. We need to get some liquidity up under that ass. All right? Get that net worth up. Stop losing money. So if I am risking $100, okay? Now the reason I bring up the account versus your risk is because if you have $1,000 and you're going to risk $100, you may want to rethink that. And don't be too good for 40, 50 bucks on a trade. Don't be too good for 30 or 40 dollars. Don't be too good for $10 because your job is to continuously make money day after day. Don't care how small, how big, because I'm telling you right now, your 5-year self will thank you. And you'll just be able to compound it and compound it and compound it. This is a long game. If my risk tolerance is $100, I did this yesterday for you guys. Did everybody leave? Shit. Well, I was just getting ready to get into like one of the biggest lessons on why people fail. I don't know if people left or not. You still here, Ann? Because I really want you to learn this. I do. I want you to learn this. I'm not sure what's going on. If you're still here, just let me know. Yeah, if you guys are still here, just let me know if you guys are or not, because I'm not going to waste my... Oh, okay, all right, because it doesn't show me what's going on. All right, so I'm gonna give it to you guys right now for free. All right, this is so important, guys. So once you figure out what your risk tolerance is, if you're comfortable, right? If you're comfortable losing $50, or I'm gonna use $100. If you're comfortable losing $100 on each trade, all right? Okay, cool, man. My guy, listen, I'm always here too, bro. I'm always here too. You guys know how to get a hold of me if you guys ever need anything. So, let me find it real quick. Let me go to my notes. This is it right here. I don't know how to make this bigger. This right here is your formula to risk management. I'm going to give you guys 2 scenarios. Here's 2 scenarios, okay? Let's just take for an example, like United Healthcare. We'll just say UNH, it's a $500 stock. If UNH is at $500 and my stop loss is at $4.95 and I want to take a long, if I buy the stock at $500 and I say if it pulls back down to $4.95 area and possibly below, I will stop out, because therefore I will know that that support is no longer support. So, how many shares do I have to buy in order for me to lose $100? I would have to buy 20 shares. I would buy 20 shares with a stop loss of $5 from $500 to $4.95. That would be a $10,000 position size. And I'm losing $100 on a $5 stop loss. Scenario 2. I have a $10 stock and my stop loss is at $9. How many shares do I have to buy in order that if I get stopped out, I lose $100 or within that area? I would have to buy 100 shares, and I'm only spending $1,000. I'm spending on one position $10,000. I'm still losing $100. On the second position, I'm spending $1,000, still risking $100. This is risk management. This right here. If you guys don't know this, and you can do this with options, we teach the gamma and all that stuff. This is the biggest lesson that can help you stop losing so much money. All right? It doesn't. I've been doing this for almost 10 years now. It's just like clockwork for me. I know about where I'm going to go, and it doesn't mean, and it all depends also on the setup, right? Is that setup really comfortable? Because if it's just like a trade that you're like my Nvidia trade, I didn't go a full position size. I just put the position on, and I wish I bought more. But I did not want to be at risk of the ISM manufacturing numbers, okay? Because that number could hit, and it could be, I could have had a loss. But the setup going into the number kind of told me that I was going to be okay. Everything that I said, it did. I had to take it. I pulled my position size back, right? Because I have some green trades from the week that I don't want to give back either. All right? But that is the most important key. I can't stress that right there enough. You got to find out how much you're willing to lose. And then from there, if it's $100, it doesn't have to be 100, right? Your stop loss could be 100, but you could get a nice entry and not have to risk all of that 100. But that's your max loss. Can you get that on the full screen? I wanted to take a screenshot. So, I don't know how. I tried. Listen, did you friend request? Listen, hit me up on Twitter. I'm going to send it over to you on Twitter. I'm not going to do it on the live stream, but just give me, I'll probably be done here at 11 or 12 or something like that. And I'll send it over to you on Twitter. Because I tried getting it a full screen yesterday and today, and it doesn't make the lettering bigger, right? It doesn't make the lettering bigger. So I have to figure out how to use it. I don't know if I got to go through Microsoft Word or not. But it's very simple. It's very simple. I'll put it up here again for you. Where are my notes? Fuck. It's not even down here anymore. Fuck. You're going to have to give me a minute, buddy. I'll send it over to you. I'll make a new one on Microsoft Word. I'll expand it. And then I'll send it to you over on Twitter. What time is it? It's almost 11 o'clock now. But that right there will separate the winners from the losers. And this is why I'm constantly, my portfolio, the amount of money that I have, that I don't have to worry about losing. I'll have to worry about, here's the thing is, because if you add up that math, you could be wrong 8, 9 times out of 10. And there's another part to this. And still be profitable with a trade or two, right? You want to be able to make it so that you're making more when you're right and losing less when you're wrong. So, let me go to this, right? This is the fastest way I can think about doing this for you guys, okay? This is important. If I was to take your account, if you sent over to me your trades and I plotted them, all right? I'm going to do this right now and bear with me. Yeah, send me a message, okay? This is the chart, okay? Let me do it like this, okay? This is the chart. I'm going to put a line here right in the middle. All right, let's edit this. All right, so here is this line is going to be the separation between you and your winners and your losers. Okay? So, if you guys sent me over your portfolio, I hope I would be able, if I went to plot your stuff on a chart, I hope it would look like this. Where's the text? Okay? Winners. Let's go to like 20, I guess. Okay, winner. You guys get it, right? Winners. So there's winners. Come on. Losers, okay? Alright. I know they're two different letterings. So, this is what your winners and losers should look like if I were to separate the two, okay? You should be able to have, with a stop loss, your losses, if I were to plot out all of your trades, okay? This should be your losses over time, okay? Now, I'm doing a whole bunch. Maybe I'll make it bigger, okay? I'll make it bigger. Okay, these are your losses. That's your losses. This, you see how your losses are up close to that line? Now here's your winners, okay? These are your winners. This should be your winners, okay? Always making more than you lose, okay? If I were to plot out your losses and your wins, what am I going to see? All right, what am I going to see? These losses should be very close to that line and minimal, and your wins should look like, you know, a head and shoulders or something, right? This is how you make more when you're right, when you're wrong, by sticking to your stop loss, understanding what that number is, and understanding how many shares do you have to buy or how many contracts do you have to buy, so that when it hits your stop loss, it hits that area that you know that you are going to be wrong, the stock is not doing what you thought, you're out. And you're losing the money that you're able to lose. And this is also, it goes into when you buy right and you get that extension, take a piece off. Manage that risk. As you guys saw when I was in NVIDIA, and look guys, look at those 490 calls we entered at 40 cents. They're at $2.30 right now. That's probably 500-600% right there. It is what it is. So when you enter right, it's also going to help you lose less. All right, because you're buying at an area where if it starts to really break that area, you're going to know pretty quickly that you're wrong. And I don't mean 10 cents, 50 cents. It needs to be, like, pull back into that area. You're already ready to be a buyer or a seller or to get short. All right, it goes into that direction. Bang, you get short. If the stock is rising and you're wanting to get short, as it's pulling in and it's going up, you're getting short as it's going up, or you're grabbing your puts as it's going up. Just like my calls. I said, let's see if we get a failed breakdown here to start to rally and shake those longs out. So as it pulled back, I got long and hit those calls at 44 cents. So 490 calls for today at 44 cents. And that extension brought me from 40 cents to 60. Right? 40 to 60. What is that? That's 50%? Am I wrong? 50, 60, 70. So it's like 30%, right? So that initial rally, right? That initial move in my direction, I'm taking a piece off. All right? You don't have to, but I would, okay? That way, because we don't know. You could just get news out of nowhere. It rarely happens. It might happen maybe 10 times throughout the trading year where you just get some random news and you just limit order down and you can't get out, like you're screwed. It happens, right? It may happen about 5 to 10 times roughly, give or take. But this is, if you sent me over your portfolio And if I drew a line and dotted your losers and I dotted your winners, I would hope that it would look like this. And that means entering and exiting right, understanding what you're willing to risk, and that risk is not going to like put you out of the game in 10 trades. Okay? This, like, I'm telling you guys, it's so fucking key to worry about just entering and exiting, understanding the analysis, and getting those entries right, and taking a piece or two off, right? Dwindle that size, manage your risk, because the focus is to get that net worth up. The 2-year person from now will thank you. You're going to thank yourself that you just took all those wins and just piled them up, small or big. The home runs are going to come, right? You know, on each setup is different. If I see an A+ setup that's like, hey, I got a beautiful cup and handle here, right? We'll use the IWM. I posted this on Twitter, right? This is a trade that I'm fully confident in, and I'm probably going to have maybe a little bit. I'm gonna risk a little bit more, not much more, because I'm still going to manage to my risk. But this trade right here, look at that cup and handle with the gap up extension. This is beautiful because I have a decrease in volume on the downside, right? Decrease in volume, increase in volume on the upside. That way, this is the key, right? This pullback, that low volume pullback. And what happened? You got the gap up with an extended thing of an extension on increase in volume. I'm in it, baby. That is an A+ setup for me, just as an example. That would be a swing trade, right? Whether I get like 5 weeks, 2 weeks out, I want to be a part of that move. So each setup may or may not be different, or it should be different, really. You know, because some trades are going to set up better than others. You know, like this NVIDIA trade, I just wanted to be a part of it. I had to put the risk on. And whether I'm making a little or I'm making in the middle or I'm making a lot, it doesn't matter. My job is to make money. It is take this number, make that number bigger. That's it. That's it. And I'm telling you, like, these things are possible. They really are. And I don't think people have the formula to success. And you know what's sad about this industry? Is that people that sell memberships for thousands of dollars do not give anyone anything tangible that they can have right here on their desk to go by. And it's sad. And I'm making it. All right? I'm making it. I'm in the middle of making it right now. Some of the stuff that I've been doing. Because there needs to be something tangible. Because I do it every day. I make it. I physically make it every day for myself. Right? And it's not just like buy here, sell here. No, it's giving me the reason why. Why am I looking at this stock in the first place? What makes me think that this is going to be a stock that's even tradable? Right? Is there going to be an increase in volume, or like, is there news? Is there a technical setup? Is it a fundamental setup that's going to drive volume? And not having a bunch of stocks. Like, it's just like having your list of 5 to 10, taking that 5 to 10 list to 3. What are the best 3 that you think is going to give you the best opportunity, so you're not flying around the market looking at 20 different stocks, missing every move? You know? And again, not every stock, just because something's going up doesn't mean it's a long. I hope this stuff helps. If you guys, it's not up to me. I don't want to get in trouble or anything. But, I would love to help you guys. I would love to be able to say, let's go over your trades and let's figure out what's wrong. Let's fix it. Let's fix it. That's what I want to do. Because I know it's possible. People fail day after day after day after day. You know how many people got wiped out because they couldn't handle the volatility of the last 2 years? $10 moves, paying $200-$300 for puts on the next day expiry, losing all their money and not understanding what's really going on, not being able to handle the drawdown. Like, people got obliterated. Let me delete these guys. Give me 1 second. I'm going to let my cat in too. I think she shut herself. I think she locked herself out. Give me 1 second.
Friday morning. Welcome to Money Movers. I'm Carl Quintanilla with Sarah Eisen live on the floor of the New York Stock Exchange. Today, J.P. Morgan's chief U.S. economist reacts to this morning's stronger than expected jobs number.
So yeah, I'm going to delete this real quick, and then I'm going to search around for a move. This has got to be your target. This has got to be it. 494. We talked about, look, they're up to $3.30 from 40 cents. Oh my God. Talk about a home run to end the week. Gosh, I wish some of you guys were able to get that. I'm sorry that that's why it's important to hit, you know, subscribe, turn that notification on. I'm not going to get upset about it. I'm really happy with that trade.
Out of ISM, where we got the employment index in the 40s.
That's insane, guys.
Which took some of the pressure off of yields.
Sorry, I was just saying here, right? Look at it, $3.50 from 40 cents. I'm going to do the math on that to see what it is. But again, I'm gonna go through a couple charts real quick. Let me delete this, and then I'm gonna try to see what we got for the rest of the day.
For it. I don't think the March rate cut is the make or break thing, but the Fed being in a position to cut, if necessary, if inflation cooperates, I think that's part of the premise. 1 year ago today, 3,900 or so on the S&P 500. You started to have Fed Fund futures price in cuts at the end of last year.
Yeah, I got you,
and
buddy.
There was a big talk of, oh, the Fed says they're not done tightening and all. And we didn't get the cuts because the economy did better. And the S&P ended up at 47 and change.
I feel like the market has to choose between which
I also
worse,
wonder how
right?
Bingo's been. I haven't seen Bingo in a while.
Data or
he hasn't stopped by in a while, so I hope he's okay.
I think always what's worse is weaker economic data, because the other part of it is it's more of a temporary, we can alleviate
on that weaker services number today
when it came as a counter to the stronger number. And I also would point out that the S&P had kind of recovered off the
I'm not sure if you can hear me
retreat
or not.
after the jobs number. I mean,
Can you throw it in chat for me real quick, and I'll delete it in so I can search it. I'll search it real quick, throw it in the chat, and then I'll delete it real quick.
Corporate bonds went from 6.4 down to 5.2. It does make things a little more accommodating for the market. We're a couple percent off the highs in the S&P.
I'm sorry, guys.
I don't think anything much has happened here that changes the overall story, except that we kind of went a little nuts at the end of last year, and we've retraced everything back to the moment of the Fed meeting in December. S&P went back there. 10-year Treasury went back there.
Right. Not the only thing going on, though. There's the risk of a more regional war, wider war in the Middle East. China's recovery still not happening. Bull bear, B of A today, still elevated levels of sentiment, right?
Yes, elevated, but it's interesting because it feels as if it's kind of a shallow reservoir of bullishness. If you look at the put-call ratios in the last few days, they've picked up. Money market flows really heavy in the latest week, so it's not like people have sustainably chased this rally. So we had definitely over-optimism had to cool off at the end of last year.
Is that it? Did I get you?
Also, sell-side strategists, in aggregate are expecting almost no upside at the median. So to me, it says, yep, we got a little ahead of ourselves at the end of last year. We'll see if this remains an orderly routine pullback or something more.
All right, Mike, we'll talk in a bit. Thanks, Mike Santoli. Following the jobs number today, this is what NEC Director Lael Brainerd told us last hour.
Yeah, I think I just...
economy entered 2023 with a lot of strength in the labor market, and it carried that strength all the way through to the end of the year. So we are up 2.7 million jobs over the course of 2023. More than the best year of the previous administration, and that took place at a time where the unemployment rate was consistently below 4% throughout the year, and inflation, core inflation, came down close to that pre-pandemic benchmark of 2% over a 6-month basis. So that's a really
Shit, I'm talking and my mic's not on.
What does it all mean for the Fed moving
like
forward?
Nvidia, like it's insane. Here's the thing, like it's really easy to like get upset. So part of me, when I was going through the 15-minute chart, right?
I think they get to Q1.
When I was going through the 15-minute chart,
situation or a steep downturn in economic activity, it doesn't appear.
I want to hear this guy from JP Morgan. I was thinking 494, like that would have been it, but
barring any big surprise,
490 was my target. It's just Sometimes maybe I should have set a trailed stop. Maybe I'll have to do that next time. Set a trailed stop. You know, that's pretty crazy. They're $4.40 right now from 40 cents, guys. That's a lot of money. Think about if you bought 5 of them, or 4. Let's see, 480, like 3 of them. 2 of them, $100. You spent $100 on that trade. Would have been less, 40 cents, 44 cents. You spent $88. You spent $88 and turned that into $860.
Over at Goldman Sachs a few minutes ago, and he sees a March cut because he says core inflation is powerfully coming down, and that's what the Fed is going to want to see, and it's going to be enough for them to cut and not be so restrictive. Why do you disagree?
So I do think they're in a position to eventually cut. I don't think what we heard out of the minutes earlier this week suggests that that's something they have a plan for as soon as March.
Just give me 1 second. I'm just gonna go. I'm just doing something. I'm gonna go scan through some charts. I gotta remember what it was that I was doing. I got off track a bit.
Before I think they're comfortable to declare a victory, which I think.
I was saying that when I did for a brief minute instinctively. When I was looking at this 15-minute chart, here, I'm like, this thing, or it might even have been the 3-minute, I was like, she might have room to 494 for this gap fill, because you have a gap fill up here. You have a gap fill up in this area, and this is the previous area of support. Here's your resistance there. Support and resistance is at 495. I'm sorry, 495. But I forget what it was that I was looking at, and I'm like, we could probably get to 494. And it looks like it did. What a day. Look at that volume. Look at that volume increase. She's going, and it's only up 3%, which is a lot. And that's the other thing that I also didn't do. Was take into account the percentage. Because if you know a stock, like on average, what's the percentage on average does that name trade? Does it usually do like 1.5%, 2%? Right? This is how we go into ATR. So I'm going to I have something that I'm making, and I want to be able to give it to you guys. Okay. I will. Animal, I hope everything is all good with you. I'll be messaging you just when you wake up in the morning. It'll be there, buddy. You have a good night. Don't stress your pops out. You know, not sure why he's upset, man, but yeah, I'll see you tomorrow, bro. I appreciate you, man. I appreciate you. Thank you guys for hitting the like button.
Take a victory lap here on inflation just yet.
Right. Although we've spent a fair amount of the morning talking about the nice position for the moment that the U.S. consumer's in, given wages versus inflation. I imagine, Molly, I don't know, to what degree is disposable income a focus for you right now?
That's up to you. That's completely up to you. I don't think that they're going anywhere. What I would have done is, the way I buy on my long term, again, that's completely up to you. Listen, I'm going to tell you right now, I don't care what the SEC says. I don't care what any of them said. Now, again, I'm not going to tell you what to do, but if you were to ask me if you should invest your money in companies that I think are very well managed, that are not going anywhere anytime soon, I would absolutely tell you should. Now, that's up to you to do it. I'm not your financial advisor, right? There's going to be some volatility. You got to understand that right now semiconductors are in, and there may be a time when semiconductors are not in. But that doesn't mean 10, 15, 20 years from now that these stocks still won't rise, do a stock split, and then you'll be back up, and So yes, absolutely, I think you should. But here's how me personally, you gotta wait to buy the dips, right? When these things pull back, you gotta buy them, right? When there's blood in the streets, right? And these days that they're down, cost average down. On a day like this, no, you have a lot of stuff ahead of you. I would not buy Nvidia here. That doesn't mean that Nvidia won't just continue to go higher and we lose this. That's the risk that you take,
They've been continuing to talk about what that top line number needs to be. But if they
Do I think that they're overbought?
20% of government funding will lapse on
Do I think that they're expensive? They're a bit expensive. Yes, overbought / inexpensive. I don't think they're overbought, but I think they're a little expensive. A lot of people bring up the 2000s. But what's funny is, you guys understand that, like, in the 2000s, do you know the times earnings that some of these companies were trading? I think Nvidia right now is maybe 40 to 50 times earnings, possibly. Maybe it's a little more. Let's just say it's 60. I don't know. I have to look it up. Companies were trading at 200 times earnings, 160, 250, right? Times earnings in 2000s. Like, that's when you know something is overbought and overextended. Like, that's crazy. Yes, this is on the expensive side. I think so. What I was saying earlier, listen, I'm going to put out a video later on tonight. It's going to be about 15-20 minutes. I personally, the semiconductors were hot this year. Yes. Me personally, I don't think AI led the market higher. It wasn't AI, and I'm gonna release it tonight because I'm seeing a lot. Like, everybody is missing the biggest picture that is coming up. The biggest picture that's coming up. I'm not a doomsdayer, but I'm gonna tell you right now, if something doesn't get done, this whole rally potentially could get taken back. But that's when, if things are failed to be done, we're really gonna see what's going on. All right. I think I don't want to say too much. I'm sorry, I don't want to say too much, but I would take days like this, man. If these things pull back to their 50-day, and you're at 450 here around this 50-day, and you get to 500, that's a $50 move, and you're like, okay, it's not too bad then. We are coming up on earnings, so maybe wait for earnings. You may be able to get a pullback in earnings. So I don't think, like, overall that this earnings season is going to be that bad because of Christmas. People still had money, but I think maybe our second quarter or first quarter of this year to, like, they report the second quarter. I think that's when we could probably start to see some tightening. I mean, because you got Nike, Starbucks. Nike already came out and said that they're seeing a pullback, and things take time. Is that Microchip Tech? Why did I hear about that yesterday on CNBC? That's not Micron, is it? Are you talking about Micron? MU, I think it is. Yeah. Is this what you're talking about? Me personally, I would stick with the AMDs, the Nvidias, and maybe something I don't. I haven't done a lot of research on semis. I think one stock that ARM is very good, but I think ARM is really overpriced right now, and I think it sees a pullback maybe one day when it reports earnings. There's going to be a day where these shares get freed up on ARM and it'll sell off. It kind of reminds me of DraftKings. I watched a video, MCHP. I'll have to look at it. And do some research. We can look at the chart and see what it looks like. This looks like a solid chart. Now, you notice how every other stock was down at the COVID low, right? Let me move this. Dude, those Nvidia calls from 40 cents are at $4.95. They're at $5 now. Our entry on that this morning was 40 cents, and those 490s are at $5 fucking dollars. I need to take it away. It hit $5. There it is. That's over 1,000%. That's insane. Fuck. Again, I stuck to my plan. My target was 490. It got to 490. I said I'm good. I'm out. 100% gain. If I can't be happy with that, then. But yeah, I thought it would go to 494, 492 area. I didn't. It is what it is. I had to get better, man. I should have bought back in. I'll go over this. So what I do is, like, I will watch this back, and I'll go back over my trades. What was I thinking? Is there something I wasn't seeing that could have helped me stay in the trade? The reason I got out so quick again is because we had ISM manufacturing numbers, and I did not want to be in a full position size. So I kind of just, I ran out of shares. So it is what it is. So all these names, like across the board, right? They got slacked, they were down to the COVID lows. You actually went to the highs of 2019 or 2020 before COVID. This stock's holding up well. This is a chart that screams healthy. This chart right here tells me that this is a healthy name. This looks to be held by a bunch of this has some institutional ownership. I would honestly, I would probably be buying a piece right here. This could be a lower high, but you're getting a bounce off you just had. Oh, here's what you want to see. You have the 50-day crossing above the 200-day. It's Golden Cross. It's look at your RSI rating. It's at 39. You got that going for you. MACD is still positive, right? Off of that pullback, still positive MACD. It's looking for a long-term investor, so I thought this was a good day. And you know what? This stock is $80-some. So the thing is what I would do is just, kind of check out their earnings. So $1.62, 41 cents. I guess it pays a dividend. It doesn't surprise me because of the way the chart is. You notice how the sell-offs aren't real big and the rallies aren't real big either. It's a dividend type of play, but it's healthy. It's healthy. Low PE, good annual growth. Yeah. Yeah. I mean I like it. This chart screams healthy to me. This would have been a good buy right here. If this thing gets down to $79 into that 80, I think this is the spot that I would look at to really possibly is where I'd like to be a buyer. If I were to buy this name, it would be there. But again, it pulled back to the 200-day moving average and it's finding some volume. See how the weekly chart is for a longer term trend. See if we see anything there. Is this a low volume pullback? Yeah, look at that, right? This thing is beautiful, right? Look at this. You have your increase in volume here. Let me just do that, right? Look at that volume here. This whole year, look at that. Come on. Look at that volume right there. That's nice buying. That's what you want to see. That's what you want to see in my book. And this looks like a small so I could see this two ways, right? You kind of have a cup and handle here, but you kind of have a cup and handle there. Is this starting to play out to be an inverse head and shoulders to rally higher into 2025? C3. There's so much. So here's the thing with C3. I don't think it's the company that is the issue. I think it's more of what's going on with the stock itself. There's all kinds of shorted. It's shorted. They've diluted the hell out of it, I assume, right, from the way that it moves, right? I think that it's not something that I'm in a hurry to buy. Unless I have a reason. Because you can see this huge downtrend, man. This is all dilution. And now it's up to them, right? It's okay to dilute, but did you spend the money on the correct things? My chart's frozen. You have to give me a minute. There it goes. It works now. That's the question. right? This whole downtrend, this dilution that I feel like they've done. It's like, you know, and how are you going to, like, how you got to think about the expansion. Like, so here is my thing with Tesla, right? And I talked about this yesterday. I personally think, and I'm just curious to know if Elon and the crew, if they decide to do it, they have the best opportunity right now to be the biggest company. Because what they've done is they've went after the automotive market, right? Capital intensive. You know, the material, the engineering, the time, you know, just the margins. It's capital intensive. They've accomplished it. Now what do? I think if Elon would just do this, if he would just listen to me, make computers. Start finding a way, get into making phones. You have already tapped into a market that Apple was talking about getting into. You've done it and you succeeded. So if you could tap into computers, phones, right? Expand, because you've gotten the hardest part done. Now let's bring the real margin, right? Let's really give those Tesla shareholders what they deserve. And that is a retirement, a home. Let's give them a marriage for their kids that they could say, here, we're going to pay for your marriage. Thank Elon, right? It's early. So this is my opinion, and I'm just curious if they do that. Now, the difference between like C3 and all these other companies is like, where's the real growth? You know what I mean? Where's that real growth? Like, we want to find our 10 bagger or 5 even. Like your Googles and Microsofts, what did they do? They tapped into like every market that they could. Amazon, same thing. None of them have tapped into the automotive market. Tesla's already there. Tesla is somewhat a technology company. It's an automotive company, but if Elon would start, if they would just go in the direction of, again, computers, phones, right? Maybe some programming, right? Software, you know, even if they were to buy some good companies even. Use some of that money that they have to buy some of these good companies, start collecting revenue from there. Now, that's a whole nother story, but I think Tesla is not being utilized the way that it could be. And it's okay that Elon's not worried about that, even though that's your job as a CEO is to, take care of your shareholders. That means the big guy and the little guy. So it's like C3 and some of these other names. Like the other chart I really like, but like C3, what are they going to do? You know what I mean? They're in this. Are they going to start making semiconductors? Are they like, you know what I mean? It's like, where is the growth? Because that's the key in the market is if you're not growing, your stock's not going up. If you're not growing, you're not a growth stock. You're a value stock. So there's two boundaries in the market. It's like, what's the company doing? And, I like C3 AI. I like C3 AI a lot, I just don't know if it's the one, just personally. Maybe it is. Maybe I'm wrong. Maybe they find some new management and start to turn things around and really, really show up and show out. What's up, Black Trading? How you doing today, bro? Man, I wish you were here earlier, bro. Have a nice trade. So, NVIDIA longs. We got long at 40 cents. Those contracts are at 40. They hit $5 from 40 cents, bro. Yeah. Yeah. You know what I mean? And it's like going back to Tesla. It's like, I don't think people have really thought about it. And I don't know if Elon's thought about it. And he probably hasn't because he has all this shit going on. But I'm like, you've already you tapped into it. You tackled probably in my opinion, one of the hardest, the suckiest sections of a marketplace that there is. And you won, right? You tapped into it. Not only did you tap into it, you're the number one hit, right? Now let's get some real margins. It ain't hard. It can't be that hard to order some whatchamacallit, some whether it's AMD, NVIDIA or whatever, start making some computers, right? Bring a software to the table. Bring a computer. Make your own processor, for God's sake. You know what I mean? I think that there is a real opportunity. Phones, computers. He was talking about trains. I don't know about that whole train market, because of transportation and the government. I don't know if the margin's there. I would just go the other route, honestly, because their competitors are coming up with cheaper electrical vehicles. Here's what I think. Being a car guy, I think as long as they are able to continuously make something that looks good, performs, and still has that name, it's about what do the people want to be in. Because if I have a choice, if I want to go buy a Neo or a Tesla or something, it's going to be about the brand name. I'm going to want to be in a Tesla. Now, do I decide to buy a Mercedes or an Audi? Those are the competitors I think we need to worry about, right? Those are the big boys that people that want combustible, electric. Those are some of the high, the companies that people like because they've been around. They're an established brand. I think Tesla's just got to kind of continue to do what they're doing, and make things good. Because it's about a brand and it's about what they want to do. I think Ford and GM. I think that's just what they are. They're just Ford and GM, And as far as their stock, I don't know if I see much growth. I love Corvettes, I think they're great companies because they still, they provide, a cost-effective, because listen, you're always going to have construction. You're going to have all these trucks and vans and stuff that companies are going to need, right? We're always going to need that. Now, does Tesla start tapping into that market? That's probably not anytime soon. You know what I mean? It's not anytime soon. The Cybertruck, you can't do what you can do with an F-250 or a 2500 or even a 1500, right? You can't do what, you can do with them than you can with the Cybertruck, right? Because those, you can take it in the mud. You can throw a ladder on it, right? You can throw a ladder rack on it. It can get beat and banged up. So for that, I think that's their niche, and they've tapped into that market, and I think they own that market. And I think if as long as things don't get out of hand and there's not a major recession, I wouldn't put my money there, but I feel like maybe your money is safe there. You just have to stay up on the news and make sure that things don't go south. And I wouldn't put my money there. Maybe I would allocate a little bit because I don't see them going underwater. So that's what I feel about that. And I think that's just what they are. Like Ford and GM, they're not going to tap into another industry like Tesla and Elon probably will. I would hope that they would, because I'm telling you, it's so early with Tesla. Like as far as the long run, it's like owning Ford, 10, 15 years after it was originated, and go back to where that stock was then till now, right? Give that stock 30, 40, 50 years, But, after all the stock splits, you accumulate a lot of wealth over time. It's just up to them, though, if they're going to really put the foot on the pedal. And, being at the age that I'm in, I would hope that they would, to give people like us opportunity that don't have money, right? Because he's forgetting about that. Like when people talk about people in the markets and you're helping the shareholder, you have a few that are loaded, but it's not about that. It's about the men and women who are just trying to be able to, have a retirement, but not have a retirement, have a nice nest egg and be able to, possibly pay off their home or go on a vacation and retire and, help their son or daughter later on in life pay for a wedding. You know what I mean? Apple, let me see here. You think Apple now is well priced? I was talking about that yesterday or even last night to myself that you can see it. I seen it yesterday, right? What I seen was I started to notice that your buyers are stepping back in. To me, the stock is a $400 stock, or well, really, it would be 600, 180. Call it 200 because with the 4-to-1 stock split that happened, if I see this thing at $200, at 4-to-1, at 200, let's see, 4-to-1, that's $100. So then at 2, that would be 600. I don't know. I have to do the math. I'm not thinking right now, but I think I would nibble. Apple's always safe. I think it's got further to go. Here's my plan for Apple. You want to know my plan? I'm thinking about shorting this on the next bounce because here's what we got. If you look at a line chart, right? Let's go to CNBC because you're going to notice that on the rally up, we pulled back, and then it made that extension higher. We have taken out that low from the rally. We've now made a new low, officially closed lower. So I'm waiting for the bounce higher, and I'm going to get short. Like if I go to CNBC, search AAPL, will it give me the stock? No, AAPL. I want to show you what I'm talking about. All right, so is this the daily chart? Give me a daily chart. Okay. Wow, it's all. Hold on. One day.
The first time you made a sale online with GoDaddy was also the first time you heard of a town named Dinosaur, Colorado.
So where was the chart? Was it a 5-day? I'm trying to think of what CNBC used. So here's the rally and the pullback right here, okay? I can't remember what CNBC used, but I looked at it on TV and I'm like, whoa. So I'm going to look for a bounce back to like 185 if we can get 190, and I wouldn't mind taking a short up there just to try it and get some time with it. But she's pulled back so far. That might have been it there. So it was this right there. That pullback at 193. And you can see that we broke it. You can see that we went down and broke it. But it just kept falling. It just fell out of bed and never bounced back. Never gave you that bounce back. So you have to see what this thing does up here around this like 186.50 level. But I seen it. Yeah, it's pretty much this right there. This pullback right there. You've cleared that pullback. So I would look to see if we could bounce back to that area, somewhere in here where this square box is, and see if we can get short up there. Because this pullback is also on an increase in volume. So it's some pretty solid volume. But yesterday, I'm sorry, I know I'm going off track, but yesterday I started to notice, and I said it on the live stream, that I was like, you could tell yesterday that Apple was trying to make a recovery because it fell out of bed in the morning, then it regained the opening price, and it tried to hold it, and it tried to make a run, right? You could see here, it tried to make a run through this high, and then it just got rejected. And today, what's it doing? It's back up here. It's trying to turn itself around. Right now, if we got a pullback, I would say for a trade, I wouldn't mind looking at next week 184s, next week 185 calls on a dip buy. Because I think by next Friday, this thing comes back up to 185, 186 area. I think you see it back up here. So, and this is probably its area is 183.50 as a matter of fact. But is it overpriced? That's something I'd have to look at the finances for. You know, personally, I don't. Like, a lot of these major names, they aren't. I mean, the last quarter wasn't bad. It wasn't bad. As far as earnings, right? Actual money that was brought in, EBITDA-wise, their EBITDAs were not bad. They weren't bad at all. Could they be better? Possibly, but what do we expect in the environment that we're in, you know? And, you know, prices of goods have just, you know, pretty much eaten up a lot of people's, you know, extra money that they have. I was thinking of a word and I couldn't think of it. So you can see here it's tailing, trying to hold the 100-day. If we cannot get above this 100-day moving average, then you got to look to get short. But the thing is here's what I think happens. If you want me to be completely honest with you, I think you get this this blue line here. I know it's hard to see. I think we reject this 100-day and you get a small fake, like a pullback to test the 200, and I think your buyers really step in right there. I think they really step in. So it's one of the two, and that's how I play it. If we continue to hold this and regain the 100-day, then I would look to get a point or two. Where's it at? It's at 182 right now. You could look for like 2 points. You know, 2 to 3 points on this name. Again, this is the target, right? Because we've broken the support area. Let's go back and actually solidify that is going to be resistance. Solidify that there's more downside to come. So I'm going to let it show me. And you can see right now it's fighting that 100-day. So, and I'm watching time and sales, just sitting here talking with you, and it's pretty damn red. All right, it's pretty damn red. Look at it. See all that red that just comes in? You know, I don't know if you guys can see it or not, but shit. It's just steady selling, man. They're trying, but a lot of people own this name, so this thing is, there's a lot of shares. And you got to remember that they're doing a stock buyback, so anytime that this thing gets lower, it's going to get to a point where Apple themselves are going to buy the stock. All right, I'm going to grab something to drink real quick. I'll be back in 2 minutes. Malik, thank you for showing up, man. I appreciate the question. This is awesome, dude. I appreciate it. Got some good stuff, man. Oh, no problem, man. And if you have any other questions on like trading or anything, you know, if you want an opinion, I'll give you my opinion. I have no problem with that at all. I'm gonna turn this
the market's been very, very focused
Sorry
on the
if you
weak spots and the possibility basically of the U.S. going into recession. So, you know, in our view, what you want to think about is what's priced in basically across sectors and industry groups for recession. If a lot's already priced in, then if it happens, the risk reward
I would look for see, I don't think so. Here's what I think for Tesla. People are going to try and get long this name right here. This thing's going to pull back right to VWAP.
At some point, you're going to get a step function up. And
you guys can see right here at 238 is VWAP, previous support. It broke. Now we're regaining it. Let's see if 238 holds. But guess what? I don't think it's going to hold. I don't think you have the volume, buy-side volume, in order to hold 238. People are going to try to get long here, and I feel like it extends. I feel like it extends and then just stalls. I'm not saying that it's going to crash. I feel like you get a failed attempt higher here. It's going to suck in a lot of people that think it's going to go to the 100-day, and it could, but I don't think it is. This is what I think Tesla's going to do.
So I wouldn't say that they are priced for recession at you know, a trailing multiple well over 20 right now. And if you look back and see where we are relative to the peak, January the 3rd, 2022, a long time ago, you know, we're very close to that. Yeah.
Right. So
I got to remember, my chair's up. I almost lost you guys. My monitors almost just went. Everything just almost fell. That was close.
groups
That was close.
is where it is priced in, and that's where you want to be long. Yeah?
So materials that you think it's been too downbeat.
Exactly.
We're going to get some bank earnings starting in about a week. S&P Financials at a 1.5-year high today. Is that starting to price in?
Absolutely. So that's been, the trade that we've been long. That's what we've been recommending, and it's been working. Yeah.
Some of the calls we've gotten from other firms on banks this week suggest that we get an overshoot on multiples, especially at the regional level the next few quarters.
I think that's very possible. I think, as you said, the most important catalyst is really earnings, which start next Friday. And I think the thing to keep in mind here on earnings is that if you look at the bottom-up consensus for what it expects basically for earnings, it would be one of the worst quarters of growth outside of a recession. And if you juxtapose that against basically what's happening at the top-down or macro level, what you see is the consensus is still a little bit over 1% in terms of GDP growth. The direction of the consensus is getting basically, is for upgrades. And if you look at, nowcast indicators like the Atlanta Fed GDP, it's at a solid 2.5%. So I would argue, just like we've had for the last 5 quarters, we're likely to have a 6th quarter of, at or above trend growth.
But at the same time, that might mean fewer rate cuts than the market is expecting. And the market is seemingly focused more on that than the better data.
Absolutely. My personal view is that it's easy to talk about things that are going to happen in 6 months and 12 months, but there's a lot of water that flows under the bridge. And I mean by that, a lot of data, a lot of time for people to change their minds. I would argue if we continue to have at or slightly above trend growth, I would be surprised to see more than a couple of what I would characterize as basically fine-tuning cuts. I see the cuts if, we get a very significant slowing in growth. That's what we have in our house economics view. But I would say, that's been the consensus view, and it's been the consensus view for quite a while.
You do raise the specter of you call it the 1970s experience, kind of coloring maybe some reticence to cut as much as the market hopes.
Yeah, I think the question is, I think the pivot basically in December was a surprise, I would say, pretty much to everybody outside the FOMC, especially, sort of a 180-degree turn in 3 months. And so, like I said, 3 months is not such a long time, and we're having a lot of discussions about what's going to happen in 6 months and 12 months. It's the season to have those discussions, so it's completely understandable. But a lot of things could change by then, and the call for rate cuts is predicated basically 6 and 12 months out on a view on what's going to happen to growth. And I'm just simply pointing out that the consensus has had this strong, almost unanimous view that growth is going to fall off a cliff. So it makes logical sense that they're calling for rate cuts. But we shall see what happens to growth. So.
It's a good roadmap for at least the next 12 months.
Yeah.
Binky, thanks. Good to see you again.
Pleasure. Thank you for having me.
Coming up next, Jeff Bezos backing an AI startup looking to challenge Google's search dominance. We're going to hear from the CEO on how they plan to take on some of Silicon Valley's giants.
And we're keeping our eye on the financials, as Carl just mentioned. The sector hitting a 1.5-year high. Bank of America, Wells Fargo, JP Morgan, all in the green. JP Morgan hitting an all-time high. This ahead of the bank earnings that roll out next week. We'll be right back.
got some coffee made. Let's see if we can't find something here the rest of the day. I think that might be it for me. Like I said, I got a video that I'm going to work on this afternoon, and I think it's so important because it's going to set us up for the rest of the year. And we're coming up on it, and nothing's being done yet. Nobody's talking about it. And that's an issue because it is the reason why I think we rallied. So I'll get into it, again this weekend, or I'm sorry, tonight, because it's that important. And I think it is the most important thing of 2023 or 2024, whatever year we're in. What year? I don't even know what year we're in. Yeah. So how was your day today, Basic? How was your day today? Did you find anything? Did you do anything? I got lucky. It's not that I got lucky, but I looked at NVIDIA yesterday, and I kind of looked at it this morning, and it broke that level, and I'm like, okay, this is what I'm trading. So yeah, let's see here. Tesla's still. I think this is looking at it, guessing, coming up with a new. Yeah. The thing that I try to remember or try not to overcomplicate it and keep it simple is locating where are the sellers and where are the buyers, and not doing anything until it gets to that point. And then if it breaks one of those areas, right? Am I continuously seeing buyers step up, or am I seeing sellers step down? Right? Because that psychologically tells you a lot of what is going on with the name. It's telling you that, like Apple, for instance, perfect example. These next couple days on Apple are going to be really key, because it's going to tell me, if we get a bounce back and that bounce back doesn't last, then I think I got a nice swing trade on Apple to the downside if it's not able to make new highs. The second part to all of this is the video I'm gonna do this afternoon, because without that, none of this happens. None of this. Maybe they do, but I don't see it. I don't think that there's any way. I think there's too many issues that will be had that won't allow some of these big names to continue to run. So this is why I kind of feel like when I'm going to talk about it, it should be done. I think that they'll get it done because I think they know they need to. And I'll talk about that later. So I feel like I wonder if the market's thinking exactly what I'm thinking and not getting ahead of it, but kind of getting ahead of it and pricing in. Okay, well, it's January 5th. You got 2 months. You got a month. What's going on? This is a problem that still needs to be addressed. So, but yeah, identifying where are the buyers and where are the sellers. It's pretty obvious here, but what happened? You can see we're holding tight here. This is where we're starting to see Apple start to regain a little bit of strength. But if it cannot, be patient. And if it cannot and it pulls back, I am pretty certain that more buyers will step in at this 200-day. Apple, I think, is just overdone too quick. Look at the RSI. Just everything about this. It's below the 50-day. It's at the 100. The earnings weren't bad either. We do have a double top here. But if we can just get a bounce, right? If we can just get a bounce, then I'm going to look for the short. That's what I'm looking for. Right there. Right? That's my plan. Do I try to chase this long? I will. I may put on and like I said, look for $1 or $2. But does that happen at this 100-day moving average? Or does it happen at the 200-day moving average? That's what I'm waiting for. That's my plan with Apple. Right? I'm looking for the bounce. Just, is it happening at the 100 or the 200. Let me know. As soon as Apple lets me know, I'm going to go long, and then I'm going to switch that long to a possible short. Possibly. Shit. Oh my gosh, come on. Just put money into a CD earning. I would lock it in while we have it. That's awesome. I tried to do the same for my grandmother. I tried, and it's like, I'm like, and I'm thinking about it, and I'm like, I don't think she fully understands, like, not just the opportunity, but how much that could help her. Even though, I'm not going to say, like, because she's not rich, she's not, but she's also not hurting. So it's like there's just a middle ground where I'm like, okay, if it's not going to be for you, what about your kids, like my mom and her brothers, right? My uncles. What about them? What about the grandkids? Do you want to leave a little bit of a nest egg for the family, right, to help her sons with schools and all this stuff? I could have had her in a 2-year partial in like 2-year bonds, but also in 6-month, 3-month, all rolling over at, like you said, 5%, 5.5%, 6, 8. What did we see? We saw like 6. Did we see 6 or 7? I know we saw 6. It was like 6.25 for the 3 months. We covered it on the live stream, right? And just rolling that over for her, but it's just like I can't physically, like, I mean, I could physically do it for her, but I'm like, the bank, like these people were taught, like, the bank is where you put your money, and it's a shame, it's a shame. Yeah, that's awesome, man. That's awesome. And like I was saying, like dealing with her, like even the same thing, right? Buy some 2 years, buy some 1 years, buy some 6 months, buy some 3 months. And just roll them over. Just roll them all over. I did make some coffee, so I'm going to have to go grab that in a second. We'll browse around the markets and see if it looks like there's anything. I mean, it's Friday. You guys know how Fridays are. Let's see what JP Morgan's doing. I noticed yesterday when we were talking about it, it ended up giving half of that rally back. JP, believe it or not, earnings are around the corner already. JP Morgan reports next Friday, believe it or not. It's crazy how fast time flies when you're in the markets. I'm telling you. Like, seriously, it's pretty scary, actually. It's pretty scary. Because you're seeing these charts daily, and everything's going, and things are happening. And you look back, like even just myself, looking at this weekly chart, like, it wasn't just yesterday, but like I felt like 2018, 2017, 2019 was just yesterday. 2020, like going long Tesla, like it's crazy. So it looks like this weekly candle is going to attempt to close at the highs and close at a new high. So it's putting in some more tails up there. It's really struggling up there. And we have some divergence that I've been watching on JP Morgan. The volume's cooled off. Like, you can see the volume has just been like cut just about in half. Not in half, but like by a quarter. And you're seeing this divergence there. All right, you're seeing this divergence here to the stock. No, don't duplicate. There he is. What's up, memes? How you doing, bro? Where were you at this morning? Man, I wish we were all able to get that together. I know I had a doctor's appointment this morning. I wasn't on early. Not sure if you, man, I just, you know, I want to be able to enjoy the wins with everyone. We took NVIDIA calls this morning with a 45 cent entry and went all the way up to $5. I was out at 100% because my target was like 90. And I'm like, you know, PTS. Do I have PTS? Like PTSD? Not really. I have ADD. I have ADD, that's for sure. And it really comes out when I go through my charts in the morning. I'm going through my charts, and then I'm like I'm on NVIDIA going through that. I turn around and I'm like, why? I'm on Google. Like, I haven't even finished, you know, my analysis on NVIDIA, and here I am on Google. So when I go through charts, like my ADHD, it really comes out to where I notice it. But I don't think I have PTSD or PTS. So like here on the 15-minute chart on JP Morgan, let's see here if this VWAP attempts to break. It's a low volume pullback, but it looks like it may hold here.
So shave, grooming, sun care, skin care, feminine care, the category growth rates are there. Now, will they slow? Maybe. We're prepared for that if they do. But I would expect that what we've seen we'll continue to see, which is category growth rates. Sun care growing double digits, for example, shave growing low single digits. But every category we operate in is growing both here domestically in the U.S. and globally as well.
And just on pricing, if you could just distill it a little further, Rod, are we talking about back to 2019 levels? Are we talking about deflationary pricing?
Yeah, sir, there's no pricing coming out. We're not reducing price per se anywhere. But for example, in the United States, we don't anticipate taking any meaningful list price increases this year. Everything that we have taken has been sold in. It's in through retailers. They've accepted it, and it's there. We do have some incremental pricing still happening outside the United States, primarily in some Asian markets and Latin American markets as well. So there is still some pricing power there. And I think we're in a period where it looks like it used to look pre-pandemic, where if you have great innovation, product benefit and experience, something that gives incremental benefit to consumers, they're willing to pay for it, and you can price for it. But you have to have the innovation, you have to have the improved product and experience behind it.
All right, Rod, certainly appreciate it with the update on all the big things we're watching: inflation, consumer spending, volumes. Rod Little of Edgewell with an update. I do think
I'm gonna go grab my coffee real quick, guys. I just wanted to hear that. I'll be right back. Give me 2 minutes.
Than in household products and staples that Rod makes, as far as the pricing growth and the volume declines like we saw at ConAgra this week.
For sure. Interesting. Yeah, the innovation conversation is really fascinating, and not the end of that discussion as well. As for next week, it's going to get really busy between CPI Thursday, PPI Friday, bank earnings, including JP Morgan, BofA, Citi, Wells Friday, CES, and JP Morgan Healthcare Conference. There's going to be a ton of news.
I think there's a 10-year auction in there, too, somewhere in the middle of the week, which we're still watching that issuance in those auctions.
You'll definitely keep us honest on that stuff. Meantime, we are holding 4,700, 4,705 in the wake of the jobs number today, which, of course, has some pretty interesting internals when you mix in.
Oh, we might have an oil play later on at 1 o'clock. I might stick around for that.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, life after the streak, as stocks pace to break that remarkable 9-week run. Now the investment committee debates where the markets are likely to go from here. Most importantly, how you should play that. Joining me for the hour today, Jenny Harrington, Jason Snipe, Jim Leventhal, Steve Weiss, everybody in the house. here at Post 9. Let's go to the markets. We still are green across the board, but as you see, we are not nearly as strong as we were hour and a half ago or so. Jimmy, I turn to you first. So we're going to end this 9-week winning streak. It's the NASDAQ's worst week since September. You got the strong jobs report. Wages were slightly above. And then the ISM services was squirrely. It was weak, barely hanging on to 50.
Yeah.
What do we do with this week? What do we learn this week?
First thing, in answer to the question about, the 8-week streak, 9-week streak coming to an end, good. All right, because we needed to come to an end, right? What are we going to keep going, 10, 11, et cetera? No, this is the pause that refreshes. And my take on this week, everybody, is that this is noise. This week, the downturn the first 3 days, the upturn today, it's noise in what's going to be a very noisy year. I think it's going to be a very positive year, and I can't stress this point highly enough. The tone has changed from the last 2 years of how high is the Fed going to hike rates to now we're not talking about rate hikes. And I don't care. I'm looking at you, Scott. Not that you're coming at me, but I'm just looking at you because I want to have a focal point. I want to have a focal point here, okay? I don't care.
Just show us.
I don't care how long it takes them to cut. I don't care how many times they cut. That's irrelevant. The fact is we're no longer talking about rate hikes. Why does this matter? It means that good news is good news. It means 200,000 jobs being created is good news. It means that, now listen, I'm not all that happy with a 4.1% wage growth year over year, but it's not going to provoke the Fed to start raising rates again. And absent that, it means it's good for consumption, which is good for the economy. Look, I don't like the ISM number, and I don't like the way that labor force participation went down. But there's noise in every data series. I think we've got to strip out the signal from the noise. And right now, the signal is inflation is coming down, the economy is strong, profits are growing, and this should be a good year in the markets.
All right. So, Jenny, my distillation from all of that is that Jim says the story's intact. Right? He gave you all the reasons why he thinks it is, but that's what I take away from what he said. The soft landing, inflation down, economy good, stock market good, story's intact after this week.
I agree. And so, while the story's intact, it doesn't mean necessarily that we have the right now to go to new highs. And I don't think we do. I think when Jim said, hey, we're backing off a little bit, good, I agree, good. It was too much too fast. And so what I know we'll get to later is we've taken some money off the table. And usually when I take money off the table, it's paired with the immediate buy, right? But right now, I don't think things need to pair. And so everything's not moving in tandem. The market got kind of frothy into year end. The story's intact for this year. I feel good about this year. I know within a month or so I'll be back to fully invested. But right now I'm sitting on a little cash. And I think that's okay. When I'm thinking about the story being intact too, I think the story gets better and better as the year goes on because we have all these nasty things that are going to be out of the way. We're going to know if it's 6 rate cuts, which I don't think it is, or 3, or 2, or none. We're going to know for sure. We're going to be done with the presidential election. We're going to have way more clarity on if inflation stays like a little sticky or if it's done. But this is a year where really clarity comes in a way that we haven't experienced for the past 4. And so I'm actually feeling not good in a raw markets going to new highs way, but I'm feeling as good as I've felt in at least 4 years because as an investor, I can make decisions and invest and think about investments and think about forward cash flows in a functional way without distortions and disruptions in a way that I haven't been able to before. So to me, the investment picture is intact.
So Jason, I'm watching yields, and the market is clearly tracking where yields are going and reacting as such. I mean, the equity market, because if you have the 10-year, you get the jobs report and rates move up a little bit and cut expectations go down a little bit. Then the ISM report comes out and rate cut expectations go back up. Interest rates, the 10-year yield comes down, but I'm watching the 10-year right at 4%.
Yep.
And the equity market is clearly a little uneasy about where yields are ahead of the CPI next week. Fed meeting's not for several weeks till the end of the month, but we have earnings too. What's your great takeaway and outlook for this year? Because we haven't heard from you. By the way, Happy New Year. It's good to see you back.
Man. Yeah, no, so what I would say is the biggest thing I paid attention to this week was the Fed minutes, right? So what was evident and very clear to me was, hey, look, we are pricing
I'm going to check on my cat real quick. Let me go get her. I'll be right back. I'm going to see if we can find something. And we have some oil data coming out here in about an hour. So give me 1 second.
And to Jimmy's point, it is time for a little bit of digestion going forward. There are a lot of variables that will affect the market. We have earnings that are starting in earnest next Friday, this time next Friday, which I think is going to be great.
And by the way, I'm going to let you finish your comment, too. If we have rate cut expectations, if we guys can, in the control room, please, can we show that? It'll show you if the Fed was trying to get the market to price out a March rate cut, today's economic data didn't do the job because, as I said, jobs report comes in stronger, wages come in a little bit stronger, rate cut expectations actually go down a little bit, but then ISM comes in weak, and then you're going to see when we show it what happened next, because you were, I don't know, hour and a half ago, you were like 70+% for a March cut. So anyway, we'll show that.
She's
I want you to
sleeping,
look at that.
but she's kind of awake. And I'm like, do you want to come in
I think it's
here?
an
Like, what do you want
important
to do?
point,
You want to come hang
let's also
out?
pay attention to the dot plot.
So.
Dot plot, I mean, Jerome Powell has talked
So,
about 3 cuts. He did not
Here's the
talk about
pullback
6 cuts.
off
The
of
market's been pricing in 6 cuts.
494.
I mean,
So I was
for
a
a
little,
lot
I
of
was
us on
right
this
on
desk,
that.
I'm
There was
sure
that
this
gap fill
seems
up there.
a little bit out
This,
of this world, right? So the idea that we're also pricing out a March cut.
I'll let them finish talking real
and
quick.
kind of letting the market. Let's let the market play out. Let's see what earnings do in earnest. We'll see what financials do. We're going to focus on credit quality. We'll focus as well on provisions. I think that's going to be a big deal. They were loaded up for financials last quarter, right? So let's see what that looks like. And I think let's ultimately let earnings play out.
Okay, I'm going to come back to you in a minute because you have some moves that we need to go through, and Jenny does as well. But Weiss, I want to hear from you because I'd like your take on the same question I asked at the very top as to what your takeaway is from this week. If you feel, as Jim does.
So I would look for a target on NVIDIA to pull itself back. Now VWAP is up here at 490, so look for a pullback at 490 and see how it reacts, and see if you can't get this son of a bitch to 500. 500.
Fed policy is going to be again. Dow's now negative. S&P is leaking a little
shit,
bit.
I lost you guys. But remember,
but
those NVIDIA calls to keep you from not trading.
The headlines are still accurate.
We paid 44 cents for those 490 calls this morning.
I had said
44 cents.
Before the news came out, they're not cutting 6 times.
So if you want to pay up almost 1,000%, 800%, 600%,
they may not cut next quarter.
Probably not a
It'll
good
be
deal.
The back half of the year.
Do you still see the options?
Coming down, it's still
yeah, they're down
$1.90.
$1.90.
The moves in inflation are not what we
They're
saw.
still
selling.
Do you still selling options? Yeah, yes, I will. Like so, look, Chris.
Is out of the question yet.
Like
I just don't.
Well,
like when I do stuff like that,
50.6, I think it was.
It's kind of not in my trading account.
What's going to happen to that part of the economy?
It's like I will in my trading account, but I won't.
Has not.
You know what I mean? It's
now
like
you can't afford to start.
You know, it's
losing that.
I use that for my long-term portfolio. I'll sell because like I'll run that son of a bitch. I'll sell some covered calls or puts, mega calls, whatever. And like that's my. You know, not for my trading. I really don't when I trade. Now listen, if I got a position size that I'm really feeling confident about, I'll manage that risk by putting some on. Like coming into the video that I'm going to talk about, like I'm trying to figure out what would be the best way to manage my risk going into like the video I'm going to make later, which is going to be about like 2024 and this whole rally. It's not AI stocks. Like yeah, AI has brought the semiconductors.
With the CPI next week, if we continue
like they've brought the semiconductor names up, but that's I feel like that's all on its own. Like that's not why the market's higher. That's not why the market's higher. You know, like yes, it's a catalyst to get long semiconductors, AI names and stuff like that. But there's a bigger thing going on underneath. So the thing with selling for me is like I would only do that for my long-term portfolio really is because it's like if I were to buy and sell spreads, it's like I'm minimizing my profit. You know what I mean? So it's like am I just going to like sell 500 calls and sell 460 puts on NVIDIA? I could, right? Now I would not buy because it's like now I'm splitting the middle. Now it's like do I sell? It's like do I sell the 465s and buy the 460s? Do I buy do I sell the 500 and buy the 505s? That's minimizing. That's just taking your profit potential away. You know what I mean? Like I would, bro. Listen, when I first started this stuff, that's how I learned. I just bought names. I would watch Kramer to get ideas for different companies, because there's companies that we don't even know about, right? There's companies in my area that probably aren't in your area. Now, you're not that far. We have a lot of the same companies, but like, you know, whether it's like certain restaurants, like oil companies, like names that I didn't know about. I would try to search for like, you know, names and stuff. And then like, for instance, like, did you guys remember Waiter? WHTR or WT, it was like WHTR or something like that. I bought that name at like $2. It was a meme. It wasn't a meme stock, but it was like just one of those stocks that went around for a little bit. And I bought it, and I bought like 100 and some shares. And I was selling cover calls on that. My DraftKings, I was buying DraftKings at when it was Diamondback. The merger acquisition was at like $12, $13. I was buying DraftKings at $12, $13. And then on that run up, I was selling calls on that. Moderna, I didn't do that. That was the only other one I bought. Moderna was the only COVID play that I bought. I just felt from the articles that I read that like Moderna was going to be the one, and it just so happened it was. I was in that name at like $20 some, $28. You know, just you know, selling. I would just sell puts or calls depending on what. And you know what else I would do? On down days, I would buy TVIX. We don't have that anymore, which is triple leveraged VIX, right? I would buy the VIX, and then I would buy longer term calls, like on Apple when they did the stock split, right? That was a $13,000 hit for me. I was about to shit my pants on 2 contracts, October 400s and November 440 calls. Each of them went to over $5-6 grand. One of them was like $4 grand. The other one went to just under was just under $7,000. Was just under $7 a contract. So on those down days, like taking the time to like go long with like 6 month out, like options, a year out leaps or something, like on this dip on Apple, you got a nice double bottom there. Or this is NVIDIA. So that's how I'll play my long-term portfolio. Day-to-day trading, I'm finding the news, I'm finding different setups to make some money, take that money, put it into my long-term and buy some names with some of the profits, pay some bills, you know, just continue to build my net worth. But yeah, that's what I would do. That's how I did it, Chris, though. You know what I mean? And it wasn't so much selling options. I was selling options on the names that I had a big position on. You know what I mean? So it was like, if I lost my ass, I'm not like going backwards because I own it. Like if I lose my ass, it's because it's the money that I already own them. I can do it. You know what I mean? But like selling and buying and selling spreads, I just, as far as a trader, I just don't do it. I will if I have to. Like if I feel like if I'm long, like 20 contracts on Tesla, 10 contracts, like, and it's Monday, and I got 5, 10, 15 grand out, then maybe if I'm long, then maybe I will go out and buy, like, maybe I'll cut it in half and spend the $1,000 or $2,000 and go short. Like I will try to like minimize my risk, but rarely I rarely have to do that. You know what I mean? I've done it in the past where I've like, okay, if this goes south, I'm long 1,000 shares. Or if I'm short, if I'm buying puts, if I'm buying 10 contracts, I'm short 1,000 shares. I can turn around and buy 100 shares of the stock long, and that will, you know, the wheel strategy. I know them all, man. I know calendar spreads, butterflies, iron condors, wheels, right? You're kind of just rotating it month after month after month, week after week. I think, yeah, I know all of them, buddy. It's the best way to help get your net worth, but I would just put yourself, make sure you're at least 2 to 3 standard deviations away, and you're not going to get called on it. You got to be prepared for news that randomly comes out on that company, and it just, whoom, right? You're selling covered calls, and they come out and say, we got a new manager, and we're laying off 100,000 people, or we're laying off 15,000 people, and we're getting a new manager, and we're going to take this cash and buy some bonds. I'm going to tell you right now, that stock is going to the moon, bro. You know what I mean? And if you've sold some covered calls, you got to be ready to, like, do what you need to do. And make sure that, you know, if you've got time under your belt, take it. You know, if you start selling, what I'm saying is if you start selling options and stuff, like you start getting to like that 80% mark, 90% mark, you might as well just cut it, right? Are you going to risk 10% to lose that 90% in case something happens? You don't have to. It's very rare. It probably won't happen to you, but it can. That's why, you know, people will usually buy, you know, or sell below, above, and buy along with it. But to me, that's like, you know, it's like, you know, if I'm gonna sell, if I'm gonna sell like the 500 calls on Nvidia and then go buy the 505s, it's like that $5 difference is my profit. It's like, why wouldn't I just trade it? Yeah, I don't know. You know, I don't need to have that much capital out to get the same reward. You know what I mean? I would. That's how you get your net worth up. And that was one of the things that I was going to write about. Is how like really maximizing your net worth, like your portfolio. Really maximizing. I mean, working that son of a bitch. I don't care if you're making $5 a covered call. Sell them every week. Sometimes if they're small stocks, they'll you know, the options will be like every 2 weeks or once a month. But, you know, doing whatever you can to consistently generate income and just pound the table day after day, month after month, year after year, 10, 15 years from now. You know, it's a lot of work. You got to stay hungry there because you'll do it for a while and you'll get a little lazy. You know what I mean? People like to, like, you know, you get in a habit and then you kind of like fall out of it. And it's like, am I going to miss that $40? Am I going to miss that $20? It's not really going to make or break me. Then you start kind of getting out of it, you know, but I would suggest, I would tell anybody to, you know what I mean? Run that shit up and you're going to get tired along the way as far as like trying to manage it and like just thinking that like it's not worth your time. It's not worth the risk. But it is, because the 5-year person's going to thank you for doing it. I remember I was like working and I was like, you know, on the phone with my brokerage, like, I remember I called them just to make sure. I'm like, how do I exit out of this thing? Or like just making sure. I'm like, so I'm selling it and then I'm buying it back. Right, you know, I was at work calling my brokerage on them, and like that's how I learned before I met my mentor. You know, and the biggest thing, you know, is risk management. Honestly, as far as, you know, when I say risk management, I mean understanding the numbers and the math and how it works. I need to get a shower too. I'm gonna let's scan the markets. I'm gonna play this. If you guys have any questions, throw them in the chat. Let's see. Are you holding any YieldMax ETFs long term? Not right now. Not right now. What's funny is I thought about it. Like I was thinking about what am I going to do. I think it was over the weekend, over the holiday break. I was like, what am I going to do this year to like you're saying, like maximize, you know, to maximize the market? Like what, like, you know, like exactly what you're saying. Like, should I start buying double, triple leveraged ETFs? You know what I mean? That's a question I just asked myself. So, a good one there. I forget what the JP Morgan one is called, but it's kind of like the SPY. It pays a really fat dividend. I forget what it is. Let me look it up for you.
That's my concern. I'm not bearish. I'm going to play the names that I'm playing. I do have a lot of cash right now, and I'm looking to deploy it, but in the names that I think can withstand a declining economy.
The other question
And not one of these people so far are talking about the biggest headwind of them all. It has to be done. It has to be done for this market to go higher.
As I said, worst market.
I'm going to put this video. I can't wait to.
20% of the Nasdaq 100's losses this week alone. You've got a couple downgrades this week, which you don't often see. Maybe you see one here and there. You rarely see two in the same week. We ask this question all the time. As goes Apple,
Jeppy, good old Jeppy. I was thinking Star Wars.
So I think with Apple, as it pertains to Apple, it's always
if anyone is looking, you want to read the terms and conditions. So, I think this is pretty much like covered calls. So you have ETFs that are like that. You'll have ETFs that will sell covered calls, and if you think you're under like PDT, or not if you think, like if you think that you don't. Hold on, I'm sorry, I keep forgetting to do that. If you don't think you have enough capital to make it worth your time, there are stocks out there that sell covered calls for you that are priced low, that you can buy outright and get the dividend, or buy calls on them, right, to benefit from selling premium, right? I'm not sure if you guys know that or not, but that is a thing. So this is what I love about the equity markets is, people ask me, am I in the crypto markets? Do I do Forex? It's like, I mean, I can do it right here in the equity markets. The equity markets will give you everything and more. Crypto, selling premiums. You could, as far as the stocks, you can buy ETFs that sell premium, right? Triple leverage, double leveraged, you name it, it's got it. If I want currencies, I could go to currencies. I can trade China. I can trade Europe. I can trade Brazil, That's just it's what I love about the equity markets. It literally can offer you everything. I can play the dollar, UVXY, right? I can play the dollar. I can play oil. I can play healthcare. I can play banks. So this is why I haven't deviated from the markets. It's because it offers you everything if you know where to look. Coney, okay, cool, man. What is that about? Is it a
Look, this simple math, we know this. If
is it
the Magnificent 7 or 28% of the S&P 500, that means there's
is it a company, and it's a value company, or is it an ETF that holds like different companies, like Coin Yield Max? Oh, okay. Okay. I'll have to look this thing up. Title ETF Yield Max Coin Option Income. Okay, so what is this? Is this selling calls on Coinbase? Something like that.
Then it pops up. I'm not going to talk about the gap. It pops up 25% to 500. Comes back.
That's cool. It just came out like I think. Why is it on month? I want a day. There we go.
My advice to people in this regard is not to go say Apple's
Did coin really just get slaughtered?
But as Jenny would say,
like
you said
that?
it earlier, it's about portfolio management. It's about risk management. Choose your sizing. I'm underweight in Apple because I do think there's a little bit more downside. If it goes down 10%, I'll probably add to it from
I said to myself, man, over the summer, before I started the stream, I was like, why? And it rallied. Why did I not buy Coinbase at $30 freaking? I was looking at it and I'm like, why? This thing just stayed there, right? Around this 60. Okay, well that's 60. It was just sitting here in this $60 to $50 area. Went to $30, and I knew about it, and I never picked it up. I don't own this name. I don't own Coinbase, and I'm upset to say that I don't. I should have bought this thing, and I didn't. And I look back, and I'm like, even these days. I traded these days. I traded Coinbase in these consolidation flags. I traded it here. I haven't traded it since I think right in here. These times. I had plenty of time. All right, Basic. Basic, if I'm not here, bro, have a great weekend. All right? Have a great weekend, man. I think that was one of the deals. I think a lot of people might have let go by them and didn't realize, the opportunity. Because, like, even getting this thing at $30 to $50, look at where it's at now. Look at where it went to. It went just under $200. That's 3-4 times your money. You could have taken some of that profit off and put some of that profit in another name. Or just held it. Me personally, I'm not worried about taxes. Everybody talks about taxes this, taxes that. If I get a runner, I am going to take profit and I'm going to take that money, some of that money, and I'm going to buy something else that I feel is undervalued. And that's how you just continuously build your net worth. And I'm not saying sell the whole thing, but that's the name of the game. That's the name of the game. It's crazy. That's such a nice setup. I'm sorry. I thought I hit the button. I hate drinking coffee. I hate, slurping in front of the mic. You guys don't need to do that. It's getting warm in here. Yeah, I can see why I wouldn't deviate from that either. You know what I mean? But just over the summer, I was like, I kind of kicked myself in the ass. I'm like, why do I not own this? It was like looking at kissing a gift horse in the mouth, or whatever that saying is. It was a beautiful time to buy something that was just undervalued, and probably isn't going anywhere anytime soon. That is officially the one name that I regret not buying. And even now, like even at where it's at now, it may not be late, right? If you were to like price average, if I were to buy these dips, like buying it right now, maybe long term I would make some money, but I'm not in a hurry to buy it for some reason. I'm not that enthused to buy it when I know that 6 months ago or 12 months ago, even 6 months ago, this thing was cut in half. So we get back down here, I'll think about it if we get that chance. There was supposed to be something about an ETF for the Bitcoin thing. I thought there was supposed to be news about that. I know Bitcoin moved yesterday with it. I don't know if you guys heard that or not. They said that there was a rumor that that the SEC was going to allow some of these institutions to be able to trade or buy crypto and stuff. Let me see.
Humanly possible.
All right, got a number of stocks on the move. With committee ownership, want to hit some of those. Costco reported those sales monthly after the close yesterday, jumped almost 10%. Reiterated buy today.
Here it is, guys, right there.
Bank, you own this one. There it is.
Yeah, listen, Costco's been a beast over the last year. So what I will say, I love the renewal income stream, from the membership cards. I mean, that has always been a great piece for Costco ownership and the growth of the stock. listen, I mean,
So this was it right here. Sources report that Bitcoin spot ETF is going to be approved by the SEC for multiple firm applications. News expected tomorrow. Senior crypto reporter TechCrunch, I guess that's where it was at. So I haven't heard anything, unless you guys have. If it came out this morning or not, I'm not sure. But I seen that yesterday, and I seen that Bitcoin did have a small reaction when that came out yesterday, when that news started to circulate. Let me see here. It was right here last night. It was right there. This is an hourly chart, so it looks a little weird. To me, it looks like it's falling out of bed.
It's a reiteration of their buy price target to 350 from 285. What do we think? Because those shares are up a ton too.
Right. I think you'll be unsurprised to know that when we were talking about selling, this is in the growth portfolio.
I mean, Chris, I'm not opposed to it. That put a smile on my face.
Why didn't it lead with Palo Alto?
You know, that's a commitment, though. You know, to do that. I would go and I would read the the agreement, like, you know what I'm saying? I would read that ETS. Maybe you already have, right? You know, just see how much they're charging you. You know, read the paperwork is what I would suggest.
That's down to 3.7%, trading at 46 times. And so here you have, it kind of goes to Steve's point on Microsoft. You kind of have, like, on the one hand, of anything out there, Palo Alto should be a permanent compounder, because we know there is no end in sight ever to cyber threats, and they are at the heart, at the center of cybersecurity protection. So you're struggling with this, like, valuation, this huge run up. But
so right now, I'm just trying to wait for this oil data. It'll be out in about a half hour. There may not be a trade, and I'll probably get off of here after lunch.
I'm thinking,
I'm gonna go use the restroom. I'll be right back.
You know, all the other things that you said as well. Yes, it has an elevated valuation, but you're paying up for that.
I mean, like, check back in a week or two. I wouldn't be surprised if it leaves the portfolio, but it's just not that expensive.
I don't want to talk
So here, keep this on your radar for Microsoft. This was a stock yesterday. I was. God damn it. Sorry. Yesterday I was looking at this, and I feel like it's coming for Microsoft. Either this thing is going to fall out of bed, or it's like, look at this. Sorry, I'll go over that in 1 second. I'll be right back. My cat's at the door.
It's hard to imagine.
Give me 1 second,
guys.
guys.
The government there is talking about things to stimulate the economy. That will be good for global oil demand. What's probably more important is the Strategic Petroleum Reserve, which we're going to spend at least the next couple of years refilling. It's at half the level it needs to be here in the U.S. That's going to place an upward demand on energy prices and on these stocks, if you ask me.
Okay, so we're going to get the headlines with Bertha Coombs. Hi, Bertha.
Hi, Scott. Biden administration announcing today that it's preparing military support and aid to Japan after that
I don't know
devastating earthquake
why.
on New
I
Year's
feel
Day
like I
killed
randomly, like, laying in bed at night or sometime, I feel like I hear my cat for some reason. She wasn't even at the door. So I feel like Microsoft is like, I feel like this is going to break, guys. I feel like it's trying to rally, and it tries one more time to get up here, and then it just breaks. It breaks the 50-day, and it just starts breaking down. That's what I'm looking for on Microsoft. So I'm keeping it on my radar. This setup is like, you rally, it pulls back. It's just, you can see it just trying to roll over. So it's either going to hold and go test the all-time high, or it's just going to put in this lower low, and, like, that's it. Like, this stock is done. So keep Microsoft on watch, because, you know, Apple's already fell, and I feel like this thing is like, it's on its way with yesterday's lower high right here. And look at today, it wicked again and just got sold off. So it's coming. Something like, I feel like even if it has to be drawn out a little bit more to make a lower high, to give it the time that it needs, but you know, we'll see. In my opinion, I feel like maybe you get one last run to 374, and then it breaks down. Or this thing breaks the 50-day, pulls back, and holds 360 only to rally to a new high. One of those two things I feel like is going to happen with Microsoft, because you'll get that. You'll get the consolidation, and you'll get that pullback where you just have weak hands. They sell, and then bang, before you know it, a week later, it's up damn near all-time highs, and you're like, shit, I just sold it. A stock that did that to me was Net, and I'll never forget it. Cloudflare. Cloudflare did that to me, because it was like I bought all these shares on Cloudflare at like $30 some. It went up to like 40 or 50, and then it came back to $30 some. And I'm just sitting on this money, and I'm like, all right, now I'm down a little bit. Like, I wasn't making any money. And the first pullback that it gave me, I got rid of some. And then what happened? A month or 2 months later, this thing goes from 30 and just goes to 100, 150 to 200. I'm like, of course she did. So, so there's that psychology. It's also another reason why if you don't own names long term, you should, because that will give you the psychological, like, you'll know the numbers. You'll know, like, okay, we're down at $80. We'll be back at $100. Usually, it comes down to 80. It'll go back to 100. It'll hold 100, and then it'll go to like 115, 120. There's that level, and you'll start to, after seeing it, you'll see consolidations. You'll know how the stock works, and I think some people, I don't do it as much as I should, but I've owned a lot of these names for a while. I can see how it helps, just having a long-term portfolio and knowing where these stocks are and at what price and how they move, and how they react at those prices.
CNBC.
As you know by now, all week long the committee's been giving us their contrarian ideas for 2024. We want to continue that today. Jenny, you are first. Yours is what?
Commercial real estate, specifically offices.
Lean into it. Buy
it. Lean in, but not broadly. Don't go out and buy indexes. I'm looking at a headline right here from the Financial Times that reads, U.S. office owners face $117 billion wall of debt and repayments. Pain likely to be widely spread. If you read that and you think, oh boy, get out of commercial real estate, stay away, you are going to miss some really amazing opportunities, because it is not all created equal. And the devil is in the details here. If you have the patience, skill set, and time to say, I'm going to put that headline aside and see what's really going on, I would say, look at SL Green, which is in our equity income strategy. Look at Boston Properties, which we own for some clients. Look at Cousins, which I don't own, but I love. All of those have extremely well-capitalized owners, extremely well-located buildings, Class A buildings. They're the survivors. What you don't want to own is you don't want to own the crummy little buildings. No offense to them, but Empire Realty, for example, yes, they own the Empire State Building, but if you look at their portfolio, the vast majority of it's in the garment district. They're not able to get the rents that these other three kind of gems are. If you look at Vornado, there's a lot, you think New York City office, but you look at it, there's a lot of multifamily in there, there's a lot of retail. They're very different. What you see in New York City, and I'm going to cherry pick this to make the point, what you see in New York City is quite extraordinary. So you see that $117 billion. But when you dig into an SL Green, for example, last year, they refinanced $3 billion of debt. Almost all of that was done at the same rates that they were at. Actually, one small part of it was done at 3% less than what the previous terms had been. When you think about New York City real estate, right now there's 400 million square feet. Expectations are for 50 million square feet to come out of New York City over the next few years. So actually, supply is diminishing. That puts the wind at the back of the Class A, well-located, well-capitalized owners. If you look at the Park Avenue corridor, which is Grand Central Terminal up to 57th Street, rents are actually going up. That is hot, hot, hot real estate. So look at that. Look at Cousins, for example. Cousins has Atlanta, Dallas, Tampa, Charlotte, amazing properties. Stay away from San Francisco. Stay away from Seattle. But don't let that headline scare you off.
I'm gonna
into the negativity of it.
Okay, Jason Snipe, bet on
see what this see what Oxy's doing and stuff before these oil number comes out. Tetris Effect. Just when you said you were. Oh no, I haven't heard of it, dude. I hear my cat all the time, and I'll like go out or do something, and I'm like, she's not there. What is it? I'll have to look it up. Yeah, I figured it was something like that. Her and her meows. If I hear something on the TV, like I swear to God, I hear it. Like I'll hear it from time to time. Like yesterday, last night, not like while I was asleep, but it was like in the afternoon. And I was thinking about doing a watch list yesterday, but I was trying to do other things. Like it's like I was trying to take care of other stuff, get her fed. I wanted to take a shower. I wanted to clean up the kitchen. And like, it's just like fighting time. So I was sitting here going through a couple names. I was going through my charts, and I kept hearing, it was either on the TV or something. I kept hearing her, and twice I walked out to the kitchen and living room because I thought she was locked in the closet or something. I just had to make sure she wasn't locked in a room or locked in the closet. And she was sleeping she was in the kitchen sleeping on the chair. She sleeps underneath the table, like with the chair pushed in. And I have I always have like the back of the chair blocked with like a hoodie, or like right now there's a tablecloth that's folded up. It's a long blue thing that goes over the table. And then I fold it all up and I put it on the back side of the chair so that, it's like she's kind of like got her own little thing going on there. And she was out there the whole time. I'm like, why do I keep hearing her? I literally keep hearing her. And it just started like a few days ago. So it's starting to get warm out. It was cold here in the Northeast. I'm not sure where you're at, Chris, dude, but it was cold today, bro. I walked out, like when I went to my doctor's appointment this morning, it was frozen. Like it was bad. It was like 17, 20 degrees. I guess that snowstorm's coming in. I don't know if you are south or northern and you already experienced it, but I guess it'll be here tomorrow. It was pretty cold this morning. It hasn't been bad, but it feels. Why I say that is like it feels like it's warming up a bit. I have a long sleeve shirt on, a hoodie, and whatnot. So I just wanted to let you guys know that too, just so you guys know. I am going to be watching Microsoft for like the next couple weeks because this thing is. It's borderline making a lower high and getting ready to just get dumped. Like I can smell it. It's either going to get dumped or it's going to go back and test. It's going to shake them out and try to extend higher. And I can't think if there's any type of news or anything coming up other than like earnings. Here might be a trade, guys. I might try to take this again. You got room all the way down. I mean, honestly, you have room down to 58, in my opinion. And you have this gap fill down here. This, if Oxy cannot hold this level, guys, this is a key level. And what's funny is it's coming to that level at what time? at 12:46. You got oil data in 15 minutes. Chances are this chart is telling you that this data might be bad. This data is not going to go well, and it's probably going to be back down to 58. It's my opinion. Either it's going to hold here and make another attempt to this 50-day moving average at $60, or this thing's back at 58 by the end of the day. That's exactly where it is where I'm at. But this morning,
we are back.
At like 6:30 this morning, it was like 17.
Midday word.
I felt bad for the. I have a cat that is an outside cat. I don't know where it goes. I've talked about it before, but like during the day, it goes somewhere. I don't know where she goes. I tried following her, and she won't let me follow her. So she's either got a home somewhere else, but every night she comes right back here in the afternoon, and I feed her. I have a spot on the porch where she cuddles up in the chair and stuff. It's just, I don't know how my cat would take to her. She kind of hisses at her. They play with each other through the window, through the sliding glass door and stuff. And I've tried to let her in, but she doesn't come in, and it's all good. But she was cuddled up yesterday, and like before I laid down, she got up and ate. And like I meant to go back outside for when she lays down and like throw the blanket over top of her because she has trouble getting under it. And I didn't do it, and I kind of felt bad this morning. I'm like, damn, it was cold, and I wasn't sure, just what type of night she had. I know she's a cat and has fur and stuff, but it was pretty cold here. Look, Oxy's breaking this level. There's a gap here. There's a gap all the way back down to 58. This could be a trade right here. You just got to watch out for Warren Buffett, right? We try to get short here, and we got to worry about Buffett being in front of us buying this thing, unless he's trimming the fat too. But this 2-minute candle was probably them anyway. Yeah, I pick this one up from time to time, try to, and she don't like to be picked up either. I think she's more so scared that like I'm gonna do something with her, like put her in a cage, and she's not gonna be able to go back home. I think that's her biggest fear. Because I notice when I have keys on me, like if I'm holding a keychain or if I have my keys and she hears those keys like going back and forth, she's on alert. So I don't know if like somebody tried to catch her, the SPCA, and like keys. It's funny. I'm like, yo, she does not like keys. So we got just a few minutes here until this oil data comes out. I thought about taking this, but I'm like, I don't want it to get jammed up in my face. So I'm going to wait for the data to come out and then think about taking it. Again, I'm green this week. I don't want to give anything back. So I'm, unless I see something that I'm really confident in, I'm just going to hold off and wait for this oil data and then see what happens. I'm trying to get picture in picture on my phone. So if you guys see me spinning it, I'm trying to get picture in picture. Because like, so it's like a cheat code.
All right, welcome back. How about this?
Like don't tell anybody or don't tell Apple, but like in order to get picture in picture on YouTube, you have to like download the app. And I haven't downloaded the app. So I just kind of like cheat code it and like spin my phone and it like geeks out and it'll just get stuck.
To history, there's no precedent for companies broadly cutting their dividends. You see dividends growing from $485 billion in 2019. Next year, they should be $614 billion. Every single one of those years, including during the pandemic, you see dividend growth overall for the broad market. If you look at our portfolio and want to use that as an example, in our portfolio, which generally holds 35 stocks last year, we had 2 dividend trims, not cuts all the way. 14 companies increased their dividends. I think that's more likely. I think there's going to always be a company to cherry pick like Walgreens. For me, the last one was VF Corp. It stinks. But the reality is most companies raise, even Microsoft and Apple. Those aren't dividend income, but they're dividend growth, right? Even those guys are raising their dividends. So I think you never bet against dividends or dividend stocks.
Jimmy, you told the producers, quote, I violently disagree with this call.
Violently.
Yeah, well, I do, because I've been saying this for
Watch
quite
out.
some time. Yeah, you know, all of these companies that have been hated, these cyclical, economically sensitive companies over the last 2 years, you know what they've been doing while everybody's been crying recession? Is they've been out earning. They've been earning a lot of money. They've been generating free cash flow. I'm sorry, Steve, I love you. They've been generating cash balances, and they've been increasing and implementing
what did
dividends
Tesla do,
along the
guys?
way. That's not gonna change
So this is why, like, learning, like, understanding, like, a lot of these things that the chart's telling you can really tell you the direction of the stock. Not just that it's in a downtrend. We all know it's in a downtrend, but what's the intraday thesis? So we said for Tesla, come here, come on. So for Tesla, I said, let's see if it tries to bounce back. And I think it tries to bounce. And I said that it rejected up here at 239. It didn't quite get to 239, but I drew it out, right? And what happened? It sold off. How did I know that? I didn't know. But from doing this, from reading everything that's in front of me and not predicting, but using that and seeing how everything would interact with one another, that was the only logical thing that was going to happen, is that people were going to try to buy at that support level right here, and it was going to fail on them. Right here it was at 238. I said people are going to try to buy here at 238. You're going to get a bounce. 238, that area lined up right with what? Lined right up with VWAP, and it went up, but then that's a failed attempt hold at VWAP. So, and then it broke down. So, you know, I feel like, you know, a lot more people could have like this type of understanding if they knew or had received the knowledge to be able to like do things like that. To like how did I have a justification that would happen? By using everything that I see here and how everything would react in comparison to where it's at, what's going on, volume, MACD, RSI, you know, trade lines and VWAP. Like, I don't know. That's all. I know I'm just blabbering, but like, you know. And again, that doesn't mean that you short it. Right? Just because I said that it was going to pull back, that's not worth a trade. It's not worth putting risk on for $2-3 on Tesla. $1.50, $2. It'll move in the direction and you won't get paid because it didn't move fast enough. But I'm sure it paid. I'm sure you would have got paid. It's just, you know, probably the juice wouldn't have been worth the squeeze. That's all.
85-55.
All right, 2 big winners, 2 big losers.
I got to stabilize my desk a little bit better.
Up 7% this week. That's the second best Dow
I
stock.
almost knocked my monitors, my camera, everything almost fell off earlier this morning. I hit the desk forgetting that my seat was up. Hit the desk, boom. I need to push everything out. I need to push everything out that way a little bit. I have more room. I don't know why I was so tight in here. I don't know.
Last week, and I said, sometimes you don't need a catalyst to do well. You just need to have future cash flows ahead. That's where Verizon is. It's better than owning a bond. There's like, I don't know, low.
I thought about going underneath the TV. Also, the TV that's on the wall. I thought about going underneath of that, but I wasn't sure how.
But just know that if you're getting 7% yield, your money's going to double every 10 years, and you don't really need to worry or do too much about it. Just ride it.
So again, I'm gonna wait. I'm gonna see what this oil data is, and then see if there's an opportunity. And I'll probably be out of here. What I'll do is I'll probably just end up going and working on the video, and I'll do a live for that and get that out. Because I really think I'm on to something. I do. I just want to get it out so that people are aware. You know, I want to get this video out. You guys will be aware, and just to have it to look for and see what happens. You know, what happens if you know, either scenario. Yeah, I'm with you, Chris. I'm going to be getting out of here too, buddy. You have a great weekend, bro. Like I said, I'm going to have a video that I'm going to put out, that I'm going to do a live or whatever, and I'll put it out like this afternoon or something. Have a great weekend, bro. Check the video out. Whenever I post it, I'll put it on Twitter, and it'll just be up.
Well, we're going to assess the week that was today on Closing Bell with Courtney Garcia and Tom Lee. Find out what he thinks happens next week. Got a lot on the plate between CPI, earnings begin. So we're going to watch that closely. I hope you join me 3 o'clock Eastern time. Big interview, by the way, on Monday as well. Cathie Wood of ARK Invest is going to be with us. The CEO, CIO, halftime report. That's 12:30 Eastern time. So a couple.
All right, guys, it's 1 o'clock. Let's see what we got for this data here. Is Cathie Woods coming on, or is that next week? I didn't see that Cathie Woods stuff until just now. I have it on. I have it playing here. I didn't see it on my TV, and this is like a minute or two behind. All right, let's go see what this oil rig count data is. See what's going on with it.
Okay, Jason. So I like Marriott here. consumer discretionary earnings will be very solid this year, and I like Marriott.
All right, Jenny, what you got?
My other contrarian play was going to be Aptiv from our growth portfolio. Don't bet against EVs. 14 times earnings, 25% earnings growth ahead.
All right, SOS.
Balance of trade for Brazil, 9.36 billion. That is an increase over consensus estimates and previous month.
Hi, everybody. I'm
All
Kelly.
right.
Here's what's ahead. A stronger than expected jobs report, and Wall Street still sees a 70% chance of a March rate cut. Are they getting that wrong? That's what our economist thinks. She'll tell us why and when she sees the first cut in the cards now. Plus, by one metric, stocks aren't off to a great start this year. Well, by many metrics, but this one says it could set the tone for the rest of the year. So why is our market guest so excited? He's here to make his case and tell us all the places he's seeing
Oil rig right here.
And with earnings season nearly upon us,
+1, -2. Huh? Oh, so 501 and wait, or 499 and then 624? Huh? Fed barking at 130, guys. Oh, we might have some more volatility. I didn't see that, actually. I did not see that Fed barking was on today. Let me see what's going on here. It should already be out. Like, post it. Come on. We've already gotten the data.
I actually have an up and down on that. You'll see in this nice chart we have. But here's the thing. I think the stronger than expected jobs report offered markets a lesson in what the Fed has kind of been talking about. The improvement in inflation, the slowing of the economy, it's not a straight line. Though beneath the hood there is some slowing going on. Let me just show you here the top line numbers. Non-farm payrolls, 216. There were downward revisions again of 71,000. 10 of the past 11 reports have been revised to the downside. Unemployment rate, though, down to 3.7%.
I think it's pretty clear, guys. Like we said, it's probably
earnings, though, up just a
short.
Bit, 4.1%.
See, if you can't take this thing down to $58 flat, I would expect it to be down here. It's down 0.6%. Down here, probably be like maybe 2%, 1.5%, 1.25%, 1.75% in this area.
Last January. So the 3-month average is slowly cooling. Private sector up 164,000 this month, though. But government was 52,000 of the total there.
Get to work.
Leisure and hospitality
I got some stuff that I'm working on.
Healthcare, that doesn't matter what's going on in the economy. We need to hire nurses and doctors. That was up 38,000.
And targets, if you guys do end up thinking about this,
down 33,000.
Get some time.
Several months in a row.
Time always helps, but
58.50. With the top line coming in below expectations,
I think the real support levels, at that low 50 area, 50,
and this is what I was talking about.
58.30 down to 58.
In the outlook for the Fed.
That whole $58 area.
65% probability that
but
I
think
57%
the trend is to the downside, obviously. So I appreciate every single one of you guys. If you guys want to do me a solid, it would help the stream find someone that would like to be here.
Now has embraced just a bit more of the doubt.
Hit the like button. If you guys have any questions, throw it in the chat. Follow me on Twitter. You can message me, ask me questions. The point here is to be able to help you guys make some damn money. All right. The trade from this morning was 490 NVIDIA calls. We entered those at 48 cents, 44 cents. So it was like 44 cents. I'll have to look. 40 cents. Call it 50 cents. I don't care. 45-cent entry. They went to $5. That's probably 1,100, over 1,000%. Like 2,000%. All right. Our target was like 490. You break through 490. I said you look at 492, or not 492, but yeah, 492, 494, or 490. 494 and then 500. So that was a beautiful trade this morning. I'm really happy to end the week with a damn near 100% trade. To end the week, to start the first week of the year. And you guys can do it. You guys can do it too. I want to help you guys learn this analysis. Right? There's I breakdown on Tesla. Like we're actually under knowing how to read a chart, right? There's a lot that goes into it, and then to have the confidence to pull the trigger. We'll go cover that later. Give us a like. Thank you if you do. God bless you for doing that, because a lot of people don't. I'm stuck for words right now. But solid first week. I'm going to put out the video. Let's carry this momentum into next week. CPI, right? You're going to have Fed members speaking, I'm sure. So let's get it. Nobody and nothing can stop you from getting what it is that you want. Set your goal. If you want to make $100 grand, $1 million, make the steps to get there, and let's go get it. Let's go get it. Nobody's going to give it to us. Let's go take it. There's trillions upon trillions of money in this market. Let's take our piece. Okay? Let's take our piece. I love you guys. You guys have a great weekend. I'll have that video up here in the next couple hours. I appreciate you. Have a great weekend.